Good evening to all of you all. Then we will start the session. I think all of you join with the clear intention of the reason why we have joined and why we have this kind of the session. The main reason is for you all to make sure that your upcoming examination, which is postponed to January 2026, then on that, the successfully completion of that SL3 paper, which is the under 2020 curriculum, which is the last examination. Then for this discussion, it is a prerequisite, or it is this is I need to make a success story for y'all. Then that's why this discussion it has taken and it has organized by the Sri Lanka from the education division. Then this is almost for your which is success and for your help. Then therefore, before starting the discussion, then let me have some ground rules. Then after ground rules, then we will start. Then it's very transparency manner. We can do the session. Then the one thing which I need to tell you, this entire recording and the relevant answers will be available for all of you. Then don't be panic and don't which is be in a too stressed manner. What happened to this answers and how this can be got to us. Then like that, don't think about those things. Okay, this is for your session. This is for y'all, the students who are which is doing exam for January 2026. Then therefore, within the first 2 weeks, the exam is there for the subject. I think within second week it is there. Then all the nitty-gritties, all the resources, it will be available for y'all. Then therefore, don't be panic about that. Don't be so stressed about that. Then it's arranged all good of y'all. Then that's the first thing. And the second thing, which is I'm starting from the methodical order from the question 1 to question 3 in the same manner. Then in that context, there are answers available. But what I am doing, there are situations which I personally, I really need to go for the discussion rather than go for the detailed answer. Then therefore, at that point of situation, what I am doing, I really need to have taking the summary of the question, analyzing it, take the action verb, and develop an answer format with y'all. Then in the different scenarios, I'm engaging with that. In some questions, especially in the calculations, don't worry, I'll take the entire question and the answer and all. In the writing part of the answers, if I thought, no, just going for detailed answer, it's useless. But if it is good for me to analyze the question and go for the answer format and take in the available open book referential materials or else from the double taxation treatise, if I can make you more comfortable at your actual exam, then I'll do so. Then likewise, the approaches will be different. Then that's the second ground rule. And the third ground rule, you can ask the questions. You can raise your voice and you can simply put your questions to the chat box. The main 2 questions, which is the recording and the answers, I have given the answer. Then, which is, I wish that you're not going to ask that question again. Then after now, once we completed the question 1, you all can ask any questions related to that. Then after that question 2 years and the question 3 like that, we will move forward. Then that's how we are going to have this session in a interactive manner. Okay, in an interactive manner. Now with 6:42, now I'm starting discussion. Then here This is the paper, and very clearly as it is given here, which is this based on the common pre-seen provided for June 2025 examination. Then it is applicable for the question 3 only. Then at the time of the question 3, then I will take the common pre-seen which is attached to this paper, and from that the relevant nitty-gritties we will take. Okay, that is a one communication. And I think that right now you all know what are the open book referential materials, and which is on the thing how to use these things. Then everything, I think it's clear to you all. Once there's some questions I'm taking act straightforward, and I really need to show how you all write answer in an application manner. You all in the strategic level, no theory, just writing of the mere theory, it's not getting marked for you all. Then therefore you have to apply it to the given scenario. Then thereby we have to apply it in a correct manner. Okay. Then as usual, I'm coming to the instructions anyway. The first one is the time allowed. It's a 15 minutes, and for the reading and for you to plan the questions. Now, please understand this gravity of the how to get the answers. Then it will be arranged by the institute. Then come to the serious mood of the paper again. Then which is the 15 minutes. Why you should have the 15 minutes? The 15 minutes for you to plan your answer. Now, how to plan your answer? It's not the utter waste of this your 15 minutes time. Okay? Then it's, you know, entire 3 questions are compulsory. You don't have anything to choose. The pick and choose arrangements are not there in this paper. Then what is here, what you have to select may be the order of what you are doing, the questions. Then it may be from the, whether I'm going the, with the order of the 1, 2, 3, or else 2, 1, 3, or whatever. It's your mechanism, it's your strong points of the questions, then you can approach. Then other than that, you know, all 3 questions are compulsory. Then if all 3 questions are compulsory, then you should have a mindset how you are going to utilize this 15 minutes in effective manner. Then therefore, this 15 minutes use for you to read the selected question. For me, I'm normally going with the requirement and the facts of the question. It may be not your approach. Maybe you're in the approach of the facts and the requirement, whatever. Then in this 15 minutes, maybe 1 to 3 minutes, maximum 3 minutes you may utilize to select order of the questions what you are going to do. But the thing is, mainly in that the 12 minutes after 15, if you have taken 3 minutes away, then for next 12 minutes, then take a nice breath, and after that, you all can read the question what you have selected, and you can read the requirements, and you can have your answer formats for separate parts. Then when the answer booklet received, then you all can start the writing. Then other than it's a reading, I really need to concentrate on this 15 minutes or the 12 minutes for you to plan your answer. Read the, while maintaining the quality of the reading, you have to plan your answer, and how that 15 minutes effectively use for you to obtain higher marks, it's up to you. Okay, that is on the first point. Second point, it's 100 marks, and you know there are 2 sections. In section 1, question 1 and question 2, and the section 2 for the question 3, which is on the pre-seen based question. And I'm not going to this 5 and the 6, the open book referential materials. Then when it comes to this open book referential materials, this all, the Inland Revenue Act with the latest amendment up to your year of assessment of the 24-25, and VAT up to your year of assessment of 24-25, with the amendments and the Gazette notifications. The Gazette notifications all published in the CA Sri Lanka website, and the list is there, Gazettes are there. Then you can take the printouts, and if it is required to certify, you have to certify. If not, then you can bring those only permitted reading materials to the examination. And when it comes to, that's for the point number 6. And point number 7, the using of the open book referential materials. When it comes to the using of the open book referential material, it's very clearly given. I really need to come for this first bullet in here. Highlighting, sidelining, and underlining relevant sections in the publications are allowed. Short notes in the permitted publications are allowed only if they are handwritten and are relevant to the particular paragraph. This is very, very important. To a particular paragraph or section in the publication which explain the paragraph or section. But it has given, it should be explain the relevant paragraph or a section. Then don't go and write unnecessary things in front of that paragraph. Now, for example, if you are in the penalty provision, then maybe in section 180, which is on the on information return or something, then in that, when you are writing that whatever the summary, it should be relevant to that. The penalty is this. Then you can write like that. But any other provision relevant to that, or the names of the case law provisions like that, you all cannot write. Be ethical at your examination. Be ethical in your entire life. And especially in these things, the proper guidelines were provided. Then in that guidelines, please follow and do accordingly and use your open book referential materials. Then this 8, 9 and 10, I'm not going to reproduce again because it's there. Then language and the how you all using the graph and charts and all. Okay. Now come to this. As I have mentioned, I'm going with the methodical order. Okay, I'm starting from the section 1, and in section 1, I'm starting from the question 1. Okay, that's how the process is going. And here, which this question, which is in the first one, as in your actual paper, which is applicable for the non-resident and international taxation. Then when it comes to non-resident and international taxation, my first request from you all, there is a curriculum. In that curriculum, this area is there. Then you should have to have covered that part very carefully. This is your curriculum under 2020 curriculum in a corporate tax SL3. In that, the part C of the curriculum, taxation of non-resident and international taxation is a 15%. Then this question is with the 15% plus the another relevant areas under your syllabus. Then therefore, the core is, this is a law. We have to go with the Inland Revenue Act as well as we have to go with the VAT. Then therefore, please understand, we have to interpret the law correctly. For you to interpret the law correctly, you should need to know the provisions of the law in a very correct manner. Then therefore, please understand at your level, you should need to know the law, and after that it should be applied to the given scenario and your recommendation, conclusions and your logical arguments. Then that is the expectation. Then under learning outcomes of your syllabus. Then therefore, then this syllabus is one of the, not one, it's the core. It's the core for you to address, approach for your question. Okay. Then I have just taken, this is for you to take eye opener. These are your subtopics under your syllabus, and accordingly, the first question is on the non-resident and international taxation. Again, little bit in line with the taxation and business decision making with reference to the individual taxation. Okay. Then come to the question. What I am doing, I need to first come for the requirements, And first I'm taking this 8 marks part. Then after this reading of this, just I need to look at B, C, D, E at a glance. Then I need to come to the facts of the question. Okay. Then in that first one, what we have to do, we have to discuss. This is the action verb. This is critical. Whether KGLI is required to pay income tax in Sri Lanka on the following income arising from the above contract. Then when reading the requirement, you can understand, okay, there is a contract, then there is a person called KGLI, then you need to discuss the whether KGLI required to pay tax in Sri Lanka on following income arising from the above contract. Then in that there are 3 situations given: the curriculum design and digital content development, supply of software license and LMS access. Third one, academic support, staff training and the quality assurance services in Sri Lanka. These are the 3. Then how? Now this is the way, even in your actual exam paper, the framework, the scope it has given. Then you should, in your answer, shall capture all these areas which the examiner asks. Then here, support your answer seating statutory provisions of the Inland Revenue Act, in and its amendments, and the detail between Sri Lanka and Korea, and the analysis of the Article 5. Now for answer, what's the required articles it has given? Article 5, Article 7 of the Sri Lanka and Korea DTA, together with the applicable provisions of the protocol is expected. The 3 areas which you need to address together with the double taxation in the international as well as in the provisions of the Inland Revenue Act under the domestic law. Okay. Then that's for the first question A part, question 1 part A for the 8 marks. Then 8 marks, if it is 8 marks, the maximum limit, the time which you can take, it's only 14.4 minutes. Okay. Then please concentrate on your time management. The managing your time is compulsory. If not, this is not the 6 hours paper, then this is 3 hours paper. You have to arrange the things accordingly. And next, the part B, compute the income tax liability of KGLI in Sri Lanka, including remittance tax. The calculation part for the 6 marks. C, analyze whether Professor Fark is liable to pay income tax in Sri Lanka for year of assessment 24-25, referring to the domestic tax provisions relating to employment income and the double tax agreement between Sri Lanka and Korea. Again, the scope was given. And D, assess the tax payable by Professor Park in Sri Lanka, if any. It may be not. If so, you have to justify with the C. And in the year of assessment 24-25, and against E, discuss the income tax implications arising from the payment made by ELC to KGLI for LMS access and software license under the Inland Revenue Act. Again, Inland Revenue Act, domestic law, as well as the applicable provisions of the DTA between Sri Lanka and Korea for 3 marks. Then this is for entire 25 marks. It has asked. Then now I have a framework in my mind. Okay, these are the questions asked. Then I need to come for the facts of the question, and I know all the questions, the answer, there is a required format, the required points were asked. Then I should be able to provide answers accordingly. Okay. Then come to the details of the question. Now what I am doing, this is non-resident and international taxation question. Then I need to explain step-by-step approach first. Then after that, I'll come to the answers. But in the calculation, I'll come to the complete answers. But the writing parts, I need to analyze. I need to show you how you all take in the points from the questions and from the reading and application of the double taxation treaty, the application of the domestic law, and how to develop answer format and come for the answer. Okay, then you can go for the detailed answer which is given. Since the detailed answers will be provided to you in later, then I'm not going to read as it is one by one line on that. But I need to come for the discussion part of these questions. Okay, then come to this. The tested double taxation treaty is the Sri Lanka and Korea. And this the facts of the questions. Then Korea Global Learning Institute, KGLI, I'm using here after this name, KGLI, is a higher education services provider incorporated in Korea. Don't forget these things. Huh? KGLI incorporated in Korea. Specialize in academic curriculum development, virtual learning platforms, teaching, training, and quality assurance functions within the tertiary education sector. KGLI currently has no legal presence in Sri Lanka. These are very, very important. Now, what's the company? KGLI. Resident company or non-resident company? Non-resident company. Why? It's incorporated in Korea. Where it has mentioned this as a non-resident company? Under section 69. Under section 69, which is on the residential status of a company. Under section 69, subsection 4, it has mentioned if it is incorporated outside Sri Lanka, then it is non-resident company. Done. What is their principal business activity? Specializing in academic curriculum development, virtual learning platforms, teacher training and quality assurance functions. Then this is from the first paragraph. And when it comes to second paragraph, in March 2024, EduLanka International Campus Private Limited, hereafter I am using ELC, received approval from the Ministry of Education to set up a new technical and vocational training center in Colombo to provide high quality academic programs. Now, what is our main business? Our main business is providing of the services, kind of in. Then, what is in this ELC, which is the company incorporated in Sri Lanka? Then what is they are doing? They are in the project of the Technical and Vocational Training Center in Colombo. They need to build up, they need to construct, they need to set up a Technical and Vocational Training Center in Colombo. This is the project which we are try to do in Sri Lanka by a resident company, which is the ELC, to provide high quality academic programs. That's their main intention. ELC partnered with Korea Global Learning Institute. This is very, very important. Now, in this line, it has mentioned KGLI currently has no legal presence. Currently has no legal presence in Sri Lanka. Now, in second paragraph, it has mentioned to provide high quality academic programs. ELC partnered with Korea Global Learning Institute, KGLI here. Then on 1st April 2024, ELC signed several agreements with KGLI to help design the curriculum, create online learning systems, and train teachers. The project duration is 12 months. if the project duration is 12 months, now started from the 1st April 2024, the entire project should be completed from the 31st March 2025. Okay? Remember the project duration. It's very, very important. And now this is on the second paragraph. Now we can see the presence of the KGLI is in Sri Lanka through this the project by ELC. Now we need to look at how they are present in Sri Lanka in whether it's a service provision, whether it's it's only the transaction, then we need to look at. Now come to third paragraph. Under the first two agreements, now it has given, there are several agreements it's going to sign. Under that first agreement, under the first two agreements, KGLI provides all academic and digital services. Then in that, all academic and digital services needed by ELC. This includes the designing complete study programs, then such as lessons, assessments, textbooks and digital learning content, and develop a virtual learning platform that is fully hosted and maintained in Korea. They should have to have the clear LMS. The KGLI also supplies ELC with essential educational software. Read the questions carefully. The quality of the reading is very, very important. Essential educational software, including LMS license and student performance analytics systems. Then these software products are delivered online from Korea, and ELC only received what? Only received right to use them, while KGLI retained full ownership of the intellectual property. Okay, I would say these are core information of this question. All curriculum now, what has happened for with reference to this softwares and the LMS license and all these things, when it comes to this company, the ELC, they only have right to use, not the ownership of that intellectual property. Then all curriculum development, system creations, and digital licensing activities take place entirely outside Sri Lanka. Now we have the transactions with countries as well as we have transactions within the countries. Then when it comes to this agreement, that first two agreements, it is all entirely conducted outside Sri Lanka. Now, if it is so, is this the KGLI, again, is there a physical presence in, sorry, not a physical, the legal presence in Sri Lanka, is it there? No. Then still the information which we can see, there is a project, there is a non-resident person going to enroll with this, but still we need to prepare a link to tax this non-resident person. Now I'm coming to the third one, which is the, fourth paragraph. Then under the fourth paragraph, the third agreement, now the two agreements details were given, and the third agreement focuses on outside support services required in Sri Lanka. KGLI will send academic specialists to train ELC's teachers, assistance in setting up classrooms, ensure academic quality, and support the launch of new programs. Now this is again under their core business activities. Then they have provided the relevant services. Now, to coordinate these activities locally, KGLI has established its Sri Lankan subsidiary, KGLI Lanka Private Limited. Now there is another company which came into picture, KGLI Lanka Private Limited. It's a subsidiary of wholly owned. It's a wholly owned subsidiary of KGLI. And what is their business? Which manages workshop arrangements and other operational tasks. Please always keep your quality of the reading of the questions, because it is very vital when it comes to answering. This service is provided through KGLI Lanka and carried out on a cost plus 5%. Now, there are subsidiary, the two parent and subsidiary, the two companies, non-resident and resident. Then in that context, the KGLI Lanka Private Limited, they have to provide the relevant services to non-resident person on behalf of this project. Then thereby the relevant part which they are acting on behalf of the non-resident company, then they have to charge. It's not the what actual cost which they have incurred and reimbursed. In the arm's length pricing, there is a cost plus 5%, but we don't know whether it is more, should be more than that, but we don't know. But it's a there is a cost plus 5% markup. They have a charge, and the estimated cost by KGLI Lanka for this workshop arrangements and the operational task and all, it's US dollars 140,000. However, the teaching, support and training activities are performed physically in Sri Lanka through academic specialists. Very, very important. Very, very important. Okay. Now, next details, which is on the project details, the contract details with these three agreements, then how the price and how what's the time period it is going to perform, and on that period, based on the agreement, what are the contract's value? Then contract value payable by ELC to KGLI. Then the description amount in US dollars. Always read in a mindful manner. Then the payment term. Then curriculum design and digital development. Then it's a 550,000 US dollars upfront in April 2024. This is in here. The first two agreements in this paragraph. If I have numbered the paragraph for you as a reference, this is 1, 2, 3, and 4. Then after that, the second one, LMS and software licenses. Then it's 1.6 million, which is all the rights for the resident company ELC, then it has only right to use. Then it's a 60% April 2024 and the 40% September 2024. And on-site academic support and teacher training, it's a US dollar 400,000. It's a April 2024 to March 2025. The 12 months, the project period is a 12 months, then entirely that period it should be covered. It has covered, and from that, it is to that support services to coordinate that support service, to provide that support service. We have academic specialist as well as we have the KGLI Lanka Private Limited. Now you have to understand the connections. Okay. Then assume $1 USD dollar equal to LKR 292. Now that is on the contract details and how priced on the part of the contracts. Now come to next paragraph. KGLI assign a senior academic Professor Park. This is linked to here for this one. Okay. In here it has mentioned that they need to have academic specialist for this training, train the teachers, and for workshop handling, and to check the quality of the which is the education programs for that. Then thereby, KGLI assign a senior academic, Professor Park, to oversee academic quality and conduct teacher training sessions for ELC. Now, can you understand the purpose? There is a senior academic, who is that Professor Park, to oversee academic quality and conduct teacher training session for ELS. Who is the Professor Park? Professor Park is next. He arrived in Sri Lanka on 1st May 2024 and is expected to remain in the country until 31st January 2025, resulting in the approximate stay of 276 days during the project period of 12 months. Throughout this period, Professor Park continued to receive his monthly salary of US dollar 6,500 from Korea. Now, who is this? Professor Park. What his position? Employee. Employee of which company? KGLI. Okay. Then for that, the working in Sri Lanka, then for that US dollar 6,500, it's from Korea, that KGLI is paying to him, while KGLI additionally covers his accommodation expenses in Sri Lanka amounting to US dollar 1,500 per month. This is US dollar, it's a monthly salary. Please understand very clearly the details. These are very, very important. This is monthly salary. This is accommodation per month. Although he works in Sri Lanka for the above duration, which is a 276 days within 12 months period, then Professor Park remains a tax resident in Korea in the year of assessment 24-25. How it can be happen? Then we need to look at how it can be happen. Then these are the details, and after that, extracts of article 4, 5, 7, 15, but there should be a article 12 also, and the protocol of the agreement between government of the Democratic Socialistic Republic of Sri Lanka and the government of the Republic of Korea for the avoiding of the double taxation and the prevention of the fiscal evasion. For this one, the DTA, the relevant provisions are given. Please understand in here as the annexure, here as the annexures, all details will be provided. Then therefore, as in the actual paper, again the same thing. Then the relevant annexures of the double taxation treaty, the relevant part of that, it will be provided for you. Okay. Now, all the details of the questions we read. Now, let me quickly come to first part. This question I am coming for answer format, and I need to analyze the question. The detailed answer you all can refer, but I need to come for the discussion part of this. Okay. It's for your own benefit. Then discuss whether KGLI is required to pay income tax in Sri Lanka on the following income arising from above contract, which is curriculum designing, supply of software, academic support, support to enhance the serious statutory provisions of the Inland Revenue Act and the double taxation treaty between Sri Lanka and Korea, and analyze Article 5. Specifically, you have to analyze Article 5, 7 and the protocol. You have to analyze these three when it comes to the double taxation treaty between Sri Lanka and Korea. Okay. Now let me come to do this. Then in here, which is, this is on the question 1. Question 1 in that A. Now, what is the requirement? What is your action verb? It has asked. The action verb is a discuss. Then when it comes to this action verbs, where is that? Okay. When it comes to action verbs, the discuss is in the tier 2. the comprehension in that what the discuss, what's the action verb, examine in detail by arguing, showing different aspects of the purpose of arriving what? Arriving conclusion. In here you have to provide a conclusion and you have to argue by taking the details. Then in that, the three scenarios given, then under the three scenarios, you have to logically argue, then in which, due to these three contracts, then whether this non-resident company KGLI shall liable to pay tax in Sri Lanka or not. Okay, this is the action verb which you need to cover. Remember, you have to give your opinion, you have to give a conclusion. And the logical flow of the answer should be there. Now come to here, the analysis part in the question 1. In that, what they are asking, the following income arising from the above contract on these three situations, because the income divided in that three. Then after that, how to answer? Now, first thing, let me take here. What you have to do, you have to do this. Then this is the requirement. Then this is your action verb. Then under this action verb, then how you going to answer for this? How to answer? Then when it comes to how to answer, the examiner has asked on two things. One, you have to answer as per the provisions of the Inland Revenue Act. Then afterwards, then you have to answer again as per the DTA between Sri Lanka and Korea. Sri Lanka and Korea, then you have to provide your answer in this manner. You have to provide your answer in this manner. This is the one. Then what you have to link? You have to link with the whether this company, which is the KGLI, is required to pay income tax in Sri Lanka. This is what you need to address. Then for the income sources given, then as per the provisions of the Inland Revenue Act and as per the provisions of the DTA in Sri Lanka and Korea. In that, you have to examine specifically mention, you have to address the Article 5, 7 and protocol of the DTA. Okay, then these are the aspects. Now let me come to one by one on the analysis. Then in here, let me analyze one by one and I need to develop the answer form. First I will develop answer format, then after that you all can develop the detailed answer. What is the answer format? Now first thing, you have to take your answer as per the provisions of the Inland Revenue Act. Then according to the Inland Revenue Act, to chargeable with the income tax, we have to very clearly identify whether this person is a resident person or non-resident person. Now when it comes to KGLI, is a non-resident person. Now you have to first identify that. Then I'm starting from here. The first one I'm writing in the answer format. Then I need to bring the provisions of the Inland Revenue Act. First one is that provisions of the Inland Revenue Act. As per the provisions of the Inland Revenue Act, in that first point, I need to take the whether KGLI is resident or non-resident company. That's the first thing. Then, in that, you have to bring the provisions of the Inland Revenue Act. As per the provisions of the Inland Revenue Act, in that first point, I need to take the whether KGLI is resident or non-resident company. Non-resident company. That's the first thing. Then, in here, non-resident company. Then here, what I need to take? I need to take here the section. Then for me to build up the answer, I should have the code from the section 69.4, which is the residential status of a company. According to that, it has very clearly mentioned if the company incorporated outside Sri Lanka, then it is non-resident company. Then it is non-resident company. This is the second point which we need to look at. Okay. Then after that, if it is non-resident company, then what's the next thing? If it is non-resident, then as per section 4B, which is assessable income section, it has given as per section 4B, for non-resident person, income arising from or derived in Sri Lanka shall be liable to pay tax. Then under sources of income, it's employment, business, investment, and other. In this is a company, then no employment, then it's a investment income maybe, and the business income. Then afterwards, now done. We have identified this a non-resident company. If it is so, the income arising from or derived in Sri Lanka, it should be taxed. Then if it is so, that is the provisions of the Inland Revenue Act. Then according to the provisions of the Inland Revenue Act, then now we need to identify, being a non-resident company, what is the source of payment for tax. Now our perspective is to check whether they are liable to pay tax in Sri Lanka or not. Then we need to identify what is the source of income. Now for this one, to identification of the source of income, now I'm starting the thing. Then in here, I'm not taking it under the provisions of the Inland Revenue Act. I'm taking it as a second part. What is the source of income of KGLI? This is the question. Now for that, I need to come for that one by one contracts. Then in that contract, these are the activities what they are conducting in Sri Lanka. First one, curriculum design and which is a digital content development. When it comes to that one, in here, first one is a curriculum design and the digital content development. According to the details provided in here, in the question, then what has happened in the second paragraph, it has very clearly given under first two agreement, KGLI provides all academic and digital services needed by ELC. This include designing complete study text and all these things, and which is the platform and that is fully hosted and maintained in where? Korea. KGLI also supplies ELC with the essential education software and all. The right to use, it's only we have IB in ELC. Only I have right to use. I don't have any ownership on this. All curriculum development, system creation and digitalization activities takes place entirely outside Sri Lanka. No physical presence. Then under this one, and not only this one, the second one, supply of software license and LMS access, I'm taking both. Then here, the second one, supply of software license and LMS access. Both of these activities conducted in Korea, not in Sri Lanka. For very simply, these both activities, it's conducted outside Sri Lanka. Conducted outside Sri Lanka. Okay. Then here, the both conducted outside Sri Lanka. Then therefore, for me to tax this too, then for now it's a question it has asked for the article 5 and article 7. For me to take article 5, I don't have any room here. And again, if the article 5, which is the permanent establishment, if it is satisfied only, which it has created what? The business income. Then in such situation, currently for under this 2, no permanent establishment it has created. No permanent establishment it has created. Why? All conducted outside Sri Lanka. All conducted outside Sri Lanka. Now these 2 agreements, still we don't have any room to apply. And when it comes to next one, the third agreement in here, I'll take from this one, the academic support, staff training and quality assurance. Okay. Then for this one here, the third point for this, now I need to analyze the situation. How, now for these 3, now I'm going to analyze one by one. This is the provision of the Inland Revenue Act. Now I need to move to the double taxation treaty between Sri Lanka and Korea, and I need to look at under these situations how the permanent establishment can be taken into consideration, because it has given the article 5 and article 7 we have to apply. Then here for application of, even you can write in the domestic law part, the section 73 application, and again for if there is a permanent establishment, then the in that permanent establishment, irrespective of the number of days, if the fixed place of business or a service, then it can be it is created a PE. Then if it is so, the business income should be taxed. That part should become, but initially I need to analyze the content of the question for me to approach to the answer. Then the third one, I need to come for the application of DTA. Application of DTA. Why application of DTA? Let me come to this. Then I'm starting with the first point, which is the since there is a DTA as per section 75(2) of the Inland Revenue Act, the DTA provisions will prevail. DTA provisions will prevail. What's the superseding? That not the Inland Revenue Act. The Inland Revenue Act supersedes the DTA, the double taxation agreement is the main thing. Then in here, now as per double taxation agreement, I need to look at this situation. Then for this too, accordingly, I'm coming as per the agreement 1 and agreement 2. There is no permanent establishment has created. Permanent establishment has created because, now I need to justify, because all agreed activities conducted outside Sri Lanka. Outside Sri Lanka, and I have removed that two content as it's very clearly given. It's a conducted outside Sri Lanka. Now the third point, the academic support, staff training and quality assurance services in Sri Lanka. Then I'm coming to that, which is, however, under third agreement, then what has happened? The two things happen. Now I'm evaluating that. Under third agreement, which is academic support, staff training and quality assurance services, there was the Professor Park. Then under third agreement, an employee of the KGLI physically present in Sri Lanka. Physically presence in Sri Lanka and to coordinate activities, a subsidiary has formed. A subsidiary has formed. Now these two activities given. These two activities were aligned with reference to this third agreement done. Now in here, now I'm coming to directly, according to the information provided, the analysis of the Article 5. Article 5, I need to analyze. In that Article 5, I'm coming to paper. Then what are the details given in Article 5? In Article 5, now I need to come for this. To be a permanent establishment. To be a permanent establishment, what should be there? Now in the first one, permanent establishment, for the purpose of this convention, the term permanent establishment means a fixed place of business through which the business of enterprise is wholly or partly carried on. Do we have a fixed place? No. I'm taking one by one and I need to analyze because it is the purpose of the question it has asked, we need to analyze. Now in that, the Article 5, I'm taking para, in here, the para 1. Article 5, in that para 1, under para 1, it has mentioned the fixed place of business. Fixed place of business. Then as per the details, there is no fixed place of business. Fixed place of business. There is no fixed place of business. Now, then the para 2 of the Article 5, according to this one, it has given the examples of the fixed place of business, which is the permanent establishment, a place of management, branch and office, factory, workshop, mine and oil or gas well, nothing. Then for second one in here, under the examples of the PE as fixed place of business, not compatible with the agreement 3. Agreement 3. No. And the para 3, we have first A. Under para 3A, then what has happened? The term permanent establishment likewise encompasses a building site construction, assembly or installation project or an installation or drilling rig. No, Lamai. This is a provision of services. This is not in line with that. This is the activity PE. Then under Sri Lanka and Korea Double Taxation Treaty, in the activity or a construction PE, not satisfied. Not satisfied. Okay? That. And next one, the para 3B. In para 3B, what has happened? Come to the details given, which is here, furnishing of services. Yeah, we are doing furnishing of services, including consultancy services. By and in here, okay, we are providing consultancy, but in initially our scope is providing of services by an enterprise through employees or other personnel engaged by the enterprise for such purpose, but only where activities of that nature continue for the same or a connected project. Please look at this wording. Same or a connected project within the country of a period or periods aggregate more than 183 days within 12 months period. This is where the KGLI creates a permanent establishment in here. But there is a wording. What is the wording? It's a service which is a connected project within the country for a period or periods aggregating more than 183 days. Connected project. Now the question. Now don't go and blindly apply, there is an employee and he is there for 276 days. Then it's a double taxation treaty to treaty. The application is different. Then your answer is correct. But in here, it very clearly given it should be a connected project. Now the question, we have three agreements. Through that three agreements, is this connected to entire project? Is this connected to entire projects? That's why we need to look at the protocol. Now come to protocol. In every double taxation treaty, we don't have a protocol. Then one double taxation treaty we have protocol is Sri Lanka and India. And for Sri Lanka and Korea. Why we need a protocol? It's an explanatory note. Now we have main articles. In that main articles, if something lack, if something missed, if they need to explain it further, if they need to elaborate it further for the more convenient of the users, then they are using the protocol. Then these provisions, we have OECD model and the UN model of the double taxation conventions. In that convention, now, most of the cases, in the OECD model, there is a, now in 2023 and I think for the 2024 also, the publication was published for the OECD and the UN model, the conventions. Then they also look at, in a different scenarios, how to tax the taxing right to give that source country, how the things were in line. That's why the protocol is there for Sri Lanka and Korea. The wide explanation on the project, the connected project. Okay. Then here, the protocol at the moment of signing the convention between government of Republic of Korea and the government of the Democratic Socialistic Republic of Sri Lanka for the avoidance of the DTA, and the undesigning have agreed, and the following provisions shall form an integral part of the convention. These are part and parcel of this convention. I need to come for the second paragraph. There are paragraphs, but I need to come for second paragraph. And this is the Sri Lanka and Korea DTA. Then you can see this. And accordingly, which is I'm again coming to the paper, what it has given, I need to come for this second paragraph in respect of paragraph 1 and 2 of Article 7. Now we are also looking for Article 7. Then with the for me to go for Article 7, what's the main condition to be satisfied? The Article 5 should be satisfied. There should be permanent establishment. For me to tax business income, there should be a permanent establishment. Then here in the Article 7, where an enterprise of the contracting state sells goods or merchandise or carries on business. To carries on business, there should be a permanent establishment. In the other contracting state, through a permanent establishment situated therein, the profit of this permanent establishment are not determined on the basis of the total amount received by the enterprise. Very, very important point for your answer. What is given when we are computing the profit attributable to income attributable to permanent establishment, you really need not to take the total contract value. Then what it has given, but the determined only, but are determined only on the basis of the remuneration which is attributable to the actual activity of the permanent establishment of such sales or business. We are not in a sale, but we are in the business. And it's given especially case of the contracts of the survey, supplying of the examples they have given. Then it's very clearly given, which is the profits of such permanent establishment are not determined on the basis of the total amount of the contract. That's what we are doing. But are determined only on the basis of the part of the contract which is effectively carried out by the permanent establishment in the contracting state where the permanent establishment situated. Are you clear on this? Then that's why this is a connected project. Then in the connected project, if we are taking one part out, then it should be justifiable. And we are telling only from this part, it's created the permanent establishment. How you justify it has given where in the protocol. In the law it has given, then that only we can go. Then I need to link this part to here, which is under DTA between Sri Lanka and Korea. In here, the part B, it is, if I have taken the service PE, it is satisfied, then satisfied because the reason you have to give, then in the reason I need to come to the wording it has given and let me apply that. It is this one, which is the for the connected project within a 12 months period, it is there. Then satisfied because Professor Park stay in Sri Lanka more than 183 days within the project period of 12 months, and providing relevant services. This is the reason. Relevant services, I have applied that, but in here, if you can take this one as it is and take that in here, and afterwards you can take the application, the service fee PE. This is the wording. Then accordingly, which is this is satisfied. Then because the Professor Park is staying in Sri Lanka more than 183 days within the project period of 12 months and provide relevant services, and the and such part of the project, such part of the agreement is connected to the total project. Then thereby on that effectively connected part, we can, the non-resident companies creating a permanent establishment. Then where it has mentioned as per the protocol, then I need to take that word in here. Then in that, this is very, very important. Then this part I need to take as it is. This is totally eye-opener for you all. It is not only for the service sector, but also for the the particular construction site, anything it can be take. Then for protocol, then in respect of the paragraph on these things, and which I need to take the profits of the permanent establishment are not determined on the basis of the total amount received, but this is the part which is very, very important. This is the part very, very important. Then therefore, now everything good. Then therefore, as per the agreement, therefore, as per the agreement, 3, the KGLI created a permanent establishment. Now, this is, we have analyzed only up to the paragraph 3B of the DTA in the permanent establishment. Okay. What happened to other areas? Then come to other areas and we need to look at. Can we apply more? Because in the requirement it has given I have to analyze the Article 5. Then in here, notwithstanding the preceding provisions of the article, the term permanent establishment shall be deemed not to include. It's not applicable for us. It is deemed not to include. This shall not be the permanent establishment. Then situations, this is where the even there is a fixed place of business. If they are engaging in these activities, maybe on a mere displaying of the goods, maybe to only for the collecting of the information, likewise, it has given, then in that situation, it is not a permanent establishment. For us, for time being for our question, this is not applicable. Now come to fifth one. Don't forget, we have KGLI Lanka Private Limited. Then we need to look at what's the relationship with that. Now come to paragraph 5, which is we need to look at next the permanent establishment creating point, which is the dependent agent concept. If it is independent agent, no permanent establishment. If there is a dependent agent, there is a permanent establishment. Then, notwithstanding the provisions of paragraph 1 and 2 of this article, when a person other than an agent of an independent status, to whom paragraph 6 of this article applies and acting on behalf of the enterprise and has habitually exercised in a contracting state for what? An authority to conclude contracts in the name of the enterprise, that enterprise shall be deemed to have a permanent establishment in that state in respect of any activities which that are person undertaken for the enterprise, then this has given. Which is when it comes to this one, this talks about what? This talks about the dependent agent. The dependent agent. Now the situation. Now you have to think, under this situation, this company which is a KGLI Lanka Private Limited, is it created a dependent agent in here? That's the question you have to ask. Then, what are their activities they are doing? Which manages workshop arrangements and other operational tasks. For me to be a dependent agent, what should I have to do? Under Article 5, the subparagraph 5, what I have to do, I have to habitually exercise. I have to do everything on behalf of my non-resident principal, and which is I should have to have a right, shall be deemed to have which is contracting state and authority to conclude contracts in the name of the enterprise. Now you have to ask the question whether KGLI Lanka can conclude the contracts on behalf of KGLI. No. Then therefore, let me come to this one, which is in here, which is in this one, the paragraph 5, the article 5, para 5. It has very clearly given not through THR, it's through the KGLI Lanka Private Limited, Lanka Private Limited, the KGLI does not derived income from Sri Lanka. Derived income from Sri Lanka and the subsidiary company shall not have any right to conclude contracts on behalf of KGLI. Therefore, as per agreement 3, according to the article 5, para 3b, and connected with protocol KGLI created the PE and shall liable to pay tax on their business income arising from the permanent establishment. That's all. I know for me to take this answer, that's why I have not just dictating or not just look at the answer, but I need to come for the approach and I need to read the articles with you. I need to analyze the question with you, and therefore now we have analyzed the provisions of the DTA, we have analyzed the provisions of the Inland Revenue Act. Since there is a DTA, we have came into the DTA under section 75 to the mutual agreements and the assistance, that agreements, that provision. In that, we have to go for the DTA. Now we have analyzed the DTA carefully. Not only that, with the connected project with 3 components, can we take it out? We have looked into that. Then we have understood, according to protocol, we can take the component where the PE created and the income and expenditure related to that, and accordingly it has created the permanent establishment. Now the question, let me come back to the question. Discuss whether KGLI is required to pay income tax in Sri Lanka. We have discussed one by one the provisions of the Inland Revenue Act. Sources of income we have identified. Applied DTA, concluded through the DTA. We have given the conclusion, yes, they have to pay tax in Sri Lanka. Okay, this is for the 8 marks. I know I have taken more than the expected time. It's the huge time, but then I think it's understandable to you all. While analyzing the part, it's important for you all to take the things for your final actual examination. Okay, now this is for 8 marks. Now I can go to the 6 marks very quickly because we have details. Compute income tax liability of KGLI in Sri Lanka, including the remittent tax payable for year of assessment 24-25. Why remittent tax? If they are conducting a permanent establishment, if there is a business, on that we have to pay. Being a non-resident company, we have to pay remittance tax. In the remittance tax, not only that, we have to pay the corporate income tax to that. Then from the details, we have to identify what are the income and expenses. This is the main income of me, the US dollar 400,000. Why this is main income? This is the income attributable to the permanent establishment. How permanent establishment created through the Professor Park employee being in Sri Lanka more than 183 days within the total project period. Within a total project we have taken as a combined project, then accordingly it has created a permanent establishment. Now we have the income of the permanent establishment and we have expenses. One expense is here for the support services. The KGLI Lanka Private Limited is charging the invoice in me, then it's a cost to me, I have to pay them, then it's 140 US dollars, but if there is a markup of 5%, then 140, it should be increased by the 1.05%, then that need to take, then it's 1.5, then this is a one part of the cost. And not only that, we have the Professor Park. Why Professor Park came to this on-site academic support and the teacher training. Now Professor Park is directly connected to this one. Then thereby, the entire project period is 12 months, but what is his period? He is in Sri Lanka for the 1st May 2024 to 31st January 2025. Then for other months that KGLI Lanka is providing the relevant services. This is for the 276 days he is providing his services. Then he came into Sri Lanka on 1st May 2024. May, June, July, August, September, October, November, December. Is it for 10 months? Yes. It is for, which is on May, June, July, August, September, October, November, December, January. I'm sorry, it's a 9 months. Then for that 9 months period, what has happened? He's received a monthly salary of US dollar 6,500 multiplied by 9. And again, accommodation expenses, who is incurring that, who need to expense on that KGLI. Then KGLI, its expenses of them which connected to this part, then it's 1,500 into 9. Then thereby the cost is that income is there. Don't take this. If you blindly apply these things without looking at the protocol and all, then your entire answer going to be mess. It's wrong. Then therefore from this, the main thing you have to identify very clearly what should be the project component which created the permanent establishment. Then these are the expenses and the income is there. Then let me come to here. This is the computer. I think it's visible. Okay, now I think it's good manner visible. Then it's for the revenue is coming from the academic support, staff training and quality assurance services. It's 400,000 online US dollars. Then ultimately I will convert into the LKR. Then as per the third agreement, I have very clearly mentioned this is not relevant to the entire contract agreement. Then afterwards, allowable deductions we have, which is the coordination, managers, workshop arrangements and other operational tasks by this subsidiary company. Cost of the support service, a cost plus markup of 5%. Then we have the cost 140,000 on that 1.05 we have to take. Then if you really in a doubt, then 140,000 into 5% and it should be added to 140,000. Then this is 147,000 US dollars. And after that, accommodation cost for 9 months for May to January 2025. Then, I'm sorry, it's not March. It's for January. Then it's a 1,500 into 9. Then salary for 9 months. Then it's the 6,500 into 9. Then this is the answer. And this is my accounting profit. This is my assessable income from business. And this is my taxable income. In between, we don't have any the expenses or anything to be deducted. Then this is my tax on taxable income. On that corporate tax is a 30%. And the remittance tax, it's for after paying the tax in Sri Lanka, what we are going to remit from the profit. Then it's 181,000 minus 54,300 US dollars. And the remittance tax at the rate of the 14%. and this is there for the remittent tax. And this is my total tax liability in US dollars, and my conversion rate is 292. Then this is my total tax liability. This is on the, for the connected project, then the effectively connected expenses taken and the liability computed. This is on the second requirement. If you have done the first part correctly, the second part calculation is very easy. And third one, analyze whether Professor Park is liable to pay income tax in Sri Lanka for year of assessment 24-25, referring to the domestic tax provisions relating to employment income and the double tax agreement between Sri Lanka and Korea. Now for this, now I need to come for this detail. Article 5 we have applied, 7 we have applied. Now we have applied two articles. Article 4 and the Article 15 we have to apply. In here, now it's applicable to non-resident individual. In the same manner, we need to look at for Professor Park whether he is liable to pay tax in Sri Lanka. Again, the provisions of the Inland Revenue Act and the provisions of the double taxation treaty. Now I'm coming to part C, which is in here. In part C, in that, in the question, what you have to do, analyze the Professor Park is liable to pay income tax in Sri Lanka. This is the requirement. Then when it comes to requirement, it is the action verb is analyze. Then if the action verb is analyze, then when it comes to our list of action verbs, then here the analyze is in the tier 4. In that, how you are going to analyze, examine in detail in order to determine the solution or outcome. Again, you have to give your conclusion, recommendation, and you have to examine in detail the application. Very clearly you have to apply for the given scenario. Very clearly you have to apply. Now I am going to do the same thing, addressing the action verb, which is how it we have to do. Again, the same manner. I need to do the same thing, which I need to take how to answer. Then this 2 I need to consider in here. Other than that, I'm not doing anything. This is the requirement which it has asked from me. Then, as per provisions of the Inland Revenue Act and as per provisions of the double taxation treaty between Sri Lanka and Korea. Now, according to you, what is the for employment income offer? Now, who is this Mr. Park or Professor Park? Now it's good time for me to open a chat box for you all. Anyone from this, how many participants? Anyone from 61? Don't leave, huh? Don't leave when Miss Prashnahanam Apiana Kilhemandepa, please stay. Anyone from the crew, can you all tell me? I will answer for these things, huh? Then anyone from the crew, can you all tell me for being a now, Professor Park is a non-resident. No. According to this 183-day rule in domestic law, then he seems to be a resident because he has in Sri Lanka in more than 183 days. Agree? In section 69, according to that, based on the quantitative factor of the determining of the is section 69, sorry. In that subsection 1, no, I'm not asking whether he is employee or not. Yes, I know he is an employee. Yes, we know. Now, I need to know about in being an employee, then what is the provision? Being an employee, what is the domestic law provision for that employee to apply? Don't think about non-resident and which is okay, non-resident, and this is so serious. Don't think about that. Which at least for resident employee, then what's the application of tax? 59B. 59B, quantitative. It's a 59 1B, okay? 59 1B quantitative. Before that, the answer I'm accepting the APIT. The deduction of the APIT is applicable. Okay, it's employment income, agree. Then I'm asking for tax treatment. Then it is the application of the APIT. Now the situation, okay, I'm stopping asking this question. Then I need to come for this. Okay, it's APIT, I'm agree. Now we have a contradiction. Don't you understand that? As per provisions of the Inland Revenue Act, when it comes to Professor Park, he has stayed in Sri Lanka more than 183 days. Then if it is so, he should be resident in Sri Lanka. But he is a non-citizen. He is not a person who born in Sri Lanka. Then he doesn't have a citizenship in Sri Lanka. He is in Korea. But based on our domestic law, okay, section 69(1)(b, then according to that, under quantitative requirement, he is resident in Sri Lanka. Now the question, the thing, how we are going to tax him? Are we going to apply the as a resident? Are we treating him, or else still is he a non-resident? These are the points you have to think. Okay. Then therefore, what you need to look at, now we have the double taxation treaty. Before that, if the employment income, now he is employee, you have seen that he has earned employment income from Sri Lanka, then in that context, he has stayed in Sri Lanka in 183 days. Then in that situation, what is the relevant tax on employment income? Advance personal income tax. But no details it has given. It has deducted or not, no details given. Now it's given in the first schedule, subparagraph 10. Then accordingly we have to deduct the APIT. Now what's the situation on such part? It has not given here. Then not only the domestic law, we have what? We have the double taxation treaty. Now we need to move to the double taxation treaty. Based on the double taxation treaty of an individual, how we are going to determine the residential status. Clear? Then the domestic law I have discussed. Now I need to come for the, I'll give the answer format. Then I need to come for the double taxation treaty. Now in the double tax, it's a, other than that double taxation treaty, I need to take your, I need to take your, in the wording given in here. What is the wording given in here? Although he works in Sri Lanka for about duration, Professor Park remains a tax resident of Korea for the year of assessment 24-25. How that kind of the determination came? Then you have to justify that. Now it has given. It has given even for domestic law, he will be and he should be a resident person in Sri Lanka. In the question it has given, he is remains a tax resident in Korea. Then if he is a tax resident in Korea, he should be a non-resident in Sri Lanka. Now where it has mentioned, I need to again come for the detail between Sri Lanka and Korea. Rather than the just going for answer, I need to take eye opener for you all. If this small points, if you have missed in your exam in any kind, then it's not good for you all to score your marks. Then come to here, Article 4 resident. Then in here, for the purpose of this convention, the term resident of a contracting estate means person who under the laws of that estate is liable to tax therein by reason of his domicile, residence, place of the head or main office, office of management, or any other. This for company and individual both. Now I need to come for second, where by reason of the provision of paragraph 1, this one, of this article, an individual, this is where I need to take you all through. and individual then is a resident of both contracting state. Are we in that question now? Yes. Based on the quantitative factor, then he is a resident in Sri Lanka and there is a statement given. He also tax resident of the Korea. Now an individual is a resident of the both contracting state, then his state shall be determined as follows. Now what we have to do? We have to do the same thing. We have to determine his residential status based on this. He shall be deemed to be a resident of the state in which he has the permanent home. Now I'm asking from you, Professor Park, he has a permanent home in Sri Lanka? No. If he now you have to understand, we are looking under the conditions of the para 2. It has given an individual is a resident of the both contracting state. Now we are resolving that issue. Both contracting state. Now we know the both Korea and Sri Lanka is a resident. Now we need to look at how we are in which country we are taking. They came a resident Ganda. In both countries, we cannot take resident. Then therefore, we need to determine. Now I'm going to do that test. Then I'm looking for his what? His residual, his qualitative factors I need to look at as per what? As per double taxation treaty article 4. Because in the domestic law, even it has given the residual principle or a qualitative principle. He resides in Sri Lanka. The definition how we are going to arrive on that, the details not given. But in the double taxation treaty and again in the OECD model, the OECD model of the conventions, then these details were given. Now I'm analyzing the details. Then in here, state in which he has a permanent home available to him. Analyze. Now in Sri Lanka, then that person he has a permanent home. No, that's why the accommodation is given. Now from the question you can take the details. Then if he has a permanent home available to him in both contract state, I'm not going to that part. Then he does not have a permanent home in Sri Lanka. And B, if the state in which he has the center or vital interest cannot be determined, or if he has not permanent home available to him in other state, he shall be deemed to be a resident of the state in which he has habitual abroad. In Sri Lanka, he doesn't have any habitual abroad. After 9 months, he is going Korea. And then likewise we need to look at then D, if he is a national of the both states. No, he is not a national, he is a Korean national. Then I'm stopping from here. Accordingly, very clearly, under double taxation treaty, under Article 4, Mr. Park is a non-resident to Sri Lanka, not from the quantitative in the domestic law, quantitative factor in section 69 1B, but from the double taxation treaty between Sri Lanka and Korea under that Article 4, he is a non-resident to Sri Lanka. That's the first thing which we need to evaluate here before anything. Then, as per the provisions of the Inland Revenue Act, then I'm coming to answer format. Let me take this here. Quickly, I'm coming to answer format. The detailed answers will be available for you all. Then, which is in the answer format. Even this, what we are discussing, try to make available for you all. And in that, first, we need to take the residential status of Mr. Professor Park. Professor Park, as per Professor Park, as per give me 1 minute. Okay, come to this. Then residential status of Professor Park as per section 69 subsection 1B. Okay. Then under quantitative factor, he is resident. He is resident. However, as per the DTA provisions under Article 4, under Article 4, he is a tax resident of Korea. Therefore, non-resident individual in Sri Lanka. That's the first. And the second one, which is I have taken that amalgamate with the double taxation treaty also and the domestic law provision. Again, I need to come for section 4B, which is since, it's a section 4B provision, which is on the assessable income of the non-resident person. Then, since he is a non-resident individual, the income arising from or derived in Sri Lanka shall liable to pay tax. Shall be liable to pay tax in Sri Lanka. The second point, very clearly, which I need to tell you all in your simple language, please write the things. It's very, very important. And then third one, which is we need to identify what is the source of income he is generating from Sri Lanka. Then in that, as per section 73, subsection 1A, the section 73, let me take the Inland Revenue Act. Then don't blame me, I'm taking the Consolidated Act. Then in that section 73, in that 1A, it's very clearly the employment income of a non-resident person. This is there here. Then amount directly included in calculating income in that. In here, the following payment shall be a source in Sri Lanka, then which is the first one is the employment. Under that, the employment is a part and parcel of the source of payment of a non-resident person. Then to the extent derived in respect of the employment in Sri Lanka, wherever paid. This is the part it's applicable. Then therefore, under section 73(1)(a), the employment income of Professor Park, I'm taking both the rate and all, Professor Park shall liable to pay tax in Sri Lanka. Tax in Sri Lanka as per first schedule, para 10. As per APID, then he being a non-resident, non-citizen, the table 4 applicable, or else they can go for the which is on the income tax self-assessment payments, quarterly or a final payment, they can go. Then this is on the domestic law provision. Now I need to come for the application of the DTA. This is where you need to analyze. This is the small analysis part, but when it comes to DTA, you have to analyze very clearly how you are going to analyze. In this, it is given that, which is we need to look at the employment income article. What is the employment income article? It is the the Article 15, the dependent personal services. In dependent personal services, there is a different story it has elaborated. Then we need to look at that story. In here, the fourth one, we need to come for the application of DTA. Why we need to go for the application of DTA section 75(2)? If there is a DTA, then you have to apply the DTA provision, not the domestic law provision. Then in that sense, if it is so, then I need to come for DTA provision accordingly. The application of the Article 15. Article 15. Now come to Article 15 of the Sri Lanka and Korea DTA. In here, the Article 15, the dependent personal services. In that, what it has given, subject to provisions of this article, salaries, wages, and other similar remuneration derived by a resident of a contracting state in respect of an employment shall be taxable only in that state. If it is so, it's only in Korea. The employment is unless the employment exercise in the other contracting state. Now what has happened? Not only in Korea, Professor Park has the excise income in the employment in Sri Lanka. If the employment is so exercised, such remuneration as is derived therefrom may be taxed in that other state. Yes. Then that's what in our domestic law also we have mentioned the income arising in or derived from Sri Lanka. Come to paragraph 2. This is where you have to apply very correctly. I think you are familiarized with these areas. Then what it has given, notwithstanding the provisions of paragraph A, if you have not considered the paragraph A provision of this article, remuneration derived by the resident of the contracting state in respect of an employment exercised in other contracting state shall be taxed only in first mentioned state. If a resident person of the Korea is performing employment in Sri Lanka, if this all three conditions A, B, C, if these all three conditions are satisfied, then that individual only shall pay tax in Korea, not in Sri Lanka. But if from these three, even one not satisfied, he shall be taxed in Sri Lanka. Please understand the provision. Then the recipient is present in Sri Lanka, present in that other contracting state for a period or periods not exceeding in the 183 days. In our case, Professor Park, the stay in Sri Lanka more than 183 days, this is not satisfied. Secondly, the remuneration is paid by or on behalf of the employer who is not a resident of other state. Yes, this is correct. For the Professor Park, the payment made by the Korean company, not a resident in Sri Lanka. C, the remuneration is not borne by a permanent establishment or a fixed base which the employer has in other state. No, Lamai. Professor Park earned income from the permanent establishment. Then this C not satisfied, A not satisfied, thereby Professor Park has to pay tax in Sri Lanka. Now that analysis you have to do according to the application of the Article 15 if all below three conditions satisfied, then Professor Park Professor Park does not have in Sri Lanka for his employment income. Then I'm taking this 3 as it is from here, which is A, B, and C. Then I need to come for my analysis part. Then here, okay, these are the 3. Then this is A and B and C. Okay, then now I need to come for the justification and the analysis and logical application to the given scenario. Then this is the application part, which you really need to do in your answer. However, as per the provided details, Mr. Park has stayed in Sri Lanka more than 183 days within 12 months period. Within 12 months periods and ends or commences or ends within 12 months period, and the remuneration was borne by the derived by the permanent establishment which on to that KGLI. Therefore, the employment income of Professor Park shall be liable to pay tax in Sri Lanka. That's all, sorry. That's all for this one. Then this is for that answer format, and this analysis part I have done from the taking the information from the double taxation treaty. Okay, I think it's clear. I really need for you all to perform these things in your examination. It's not, I'm not telling the dependent person is coming, but in whatever the articles, whatever the question, not only for the question one, for any other question, you should have proper mechanism to analyze and apply the theory to the given scenario. This is totally theory and this is the application. Okay, and application and the conclusion. Then with that, which is on the that part completed, then the next part of the question, which it has asked, assess the income tax payable by Professor Park in Sri Lanka, if any, during the year of assessment 24-25. Very 24-25, very easy. What are the income he is generating from this project? It's US dollars 1,500 and the 6,500. This his employment income. Is here citizen of Sri Lanka or resident of Sri Lanka? We have analyzed that. He is not a resident in Sri Lanka. He is not a citizen of Sri Lanka. Then thereby, can he claim the tax-free allowance of 1.2 million which applicable for the 24-25? No, these are the things which you need to very clearly identify and apply in your calculation. Now come to the calculation. It is very, very easy. Then if you have analyzed the question very carefully, then it's not a big task for you all to do. Only thing, the students are struggling in non-resident taxation and international taxation both to approach the question. Then here, the computation of income tax liability for the year of assessment 24-25. Then it's assessable income from employment, which he has, the Professor Park. The salary, it's for the, I have taken from this one, which is for the 9 months, 6,500 into 9, and this 13,500. These are his employment income, and this is his total assessable income. Very clearly given less tax-free allowance not applicable since non-resident and non-citizen. Apply when it's only applicable for the residents and citizens. I think it's fundamental thing. Then there is nothing, and the taxable income also this 72,000 US dollars conversion rate is a 292. Now this is the taxable income. Then I have to apply the tax rates 6, 12, 18, 24, and 30, and on balance 36. Then afterwards, this is my balance tax payable. This is on the professor part, income tax liability. And finally, that's all for it's for B, then B, C, D, and for E, discuss the income tax implications arising from the payment made by ELC to KGLI for LMS access and software license under the Inland Revenue Act and the applicable provisions of the double taxation treaty between Sri Lanka and Korea. For this one, the one part of the article was missing. And now again, let me open the chat box. Now tell me, as per your knowledge, now we have in the last 3 marks of this question. Then as per your knowledge, tell me, what is the income? What is the type of income? If you have listened in previous things, I think I have mentioned it, but we will see. Then what is the income which on behalf of the LMS access and software license as a part of the contract, not under permanent establishment, but as a separate part of the contract, the KGLI receiving from the ELS. What is that income? I need a name for that income. Yeah, okay. Royalty payment. That is, it's a royalty. Now, we will have a little chat on this. Royalty, what is the WST rate applicable for royalty under domestic law? Under Inland Revenue Act number 24 of 2017? Yeah, it's 14%. Where 15? It's not 15, it's 14, no? Then it's 14%. Okay, then please remember it's 14, not 15. Then it's 14. Where it has mentioned, I need all. Where it has mentioned. From where you have mentioned it's a 14%. Section 84.1. In section 84 subsection 1A, it is not the rate. It has given the source. It has given for the investment income. If there is a royalty income, then it should be taxed. Section 195, no, I can't hit you. Yeah, the Lasita, I think Lasita, I think. Then it's the first schedule, para 10, and there was another answer, very correct answer, which is in the first schedule, para 10, Lasita's one. Then it is given. Yeah, it's the first schedule, para 10. Lamaine, section 195, it is for the interpretation section. It's not a rate. And section 88.1, it is for the final withholding payment. First schedule tax rate accepting, third schedule. Then third schedule is for the tax exemptions. It's good I'm asking these things. And for gazette, which gazette? Then, okay, I have received expected answers. Thank you for all of you. Then this is, which is on the interactive session. I really need to make this interactive because I need to look at what are the answers you're giving. Please have a good theoretical understanding of the law. Then it's very important. Now it is in the first schedule, para 10, the 14% in the domestic law. Let me take a combined answer. Under section 84, subsection 1, it is given as a royalty, but it is for the domestic. It's for the entire, it's for the person. But it's specifically given in section 73, 1C for the royalty for the non-resident person for a company, individual or any. Then in our case now we are looking for company now. Then in that section 73.1 C, it has given the royalty being a source of payment of a non-resident company. Then afterwards, which is in the domestic law, the rate is 14%. It has mentioned in the first schedule, the para 10. Now, what is given in the Sri Lanka and Korea treaty? It's I will take the double taxation treaty here. Then in Article 12 of the, and again in section 195, let me take it now, not for the data. Section 195 is for the interpretation of the royalty. It's defined. In that we have the wording of the right of use. Then in our case also, the same thing it has happened. Since I have read this in many times, I'm not wasting your time. Then it has given the right to use. It's only they have the right to use, not the ownership. It's very clear in the pink color part. Then it's a right to use. If something, the right to use, then for that, the payment what we are making them, it is a what royalty? Now this is linked to our part A. In part A, we have determined very clearly, even the project period is 12, the project has divided into 3 components. Then in that context, only one component created the permanent establishment. And the other two, it's a offshore businesses conducted outside Sri Lanka, but for that we need to make a payment to them as a royalty. Now we are looking for that, the WHT application. Then therefore we need to come for double taxation treaty. In double taxation treaty, what it has, the first paragraph, in that these are the passive income. Then in that, for the first paragraph, it has given the taxing right to the resident country, which is Korea. And second, it has given, however, such royalty may be taxed in the contracting state in which they arise, the Sri Lanka. Now, royalty arising from Sri Lanka and in accordance with the laws of that state. But if the recipient is the beneficial owner of the royalties, the tax or charge shall not exceed 10% of the gross amount of the royalty. Now what has happened? Again the section 75 too. If there is the mismatch contradiction in between the DTA and the inland revenue VAT, we have to go what? The DTA. What's the maximum rate for the beneficial owner of the royalty? Then it is not to exceed in 10%. It's 0 to 10, then it's the cap is a 10%. Now our domestic law is a 14. The double taxation treaty is 10. What you have to apply? The 10% you have to apply. Again, you need to look at the what is the definition of the royalty. Now we know under section 195 under definition of the royalty, please go through. The right to use wording is there. Now I need to come for the paragraph 3 of the article 12 and I need to look at whether the right to use is embedded in the double taxation treaty for me to apply this. Then the term royalties as used in this article means payment of any kind received as a consideration for the use of or the right to use. This is the wording, right to use any copyright or literacy artist or scientific work, including cinematographic films or tapes, and all these things are given in that, which is it's very clearly given any intellectual property for the use of or right to use copyright. We are using the copyrights, the software, the LMS for all these things and for any. It's an intellectual property we are using that part, then this is coming under royalty definition and we can apply not the 14 but 10%. That is the conclusion. Then come for this one. This is don't blame me, Ambo. This is in the answer, but I need to cover all. That's why it has given. Then this is the explanations of the question. What is how it come in as a royalty? Then secondly, as per section 73 application, source of payment and withholding tax at the rate of the 14% and under first schedule para 10. And for the section 195, what is the definition? And it's a final withholding payment under section 88(1)(a) KGLI for that part. Then this application of the section 75 too, and in the taxing right for the Korea and taxing right for Sri Lanka and the rate and all. Then this is a definition. The conclusion, as such, the payment received through right to use of software license and the applicable tax rate is the 10%. Now this is on that part and explain one by one the same thing. It's here. And from that, the paper in that question 1, it has completed, which we have to do discussion. Then for the 3 marks, that also done. And that's all on this question. Now it's open for you all. On the for the question, I can give 5 minutes. Then no, if no questions, then I need to move to the question 2. Then please ask any questions. Yeah, for your this question, why we need to explain all the parts of the double taxation treaty thing is, please look at the requirement of the question. Though in the requirement of the question, it has given we have to discuss the article in that in Sri Lanka and Korea. What's the requirement? We have to analyze in of the Article 5 and Article 7. We have to tell our answer. Then in that, for Article 5, we don't know what is the relevant part of the relevant para. Then for me to justify, I need to at least one sentence I have to write. This is not a fixed place of business. This is not the example of the fixed place of business. There is no branch of it. And this is not a construction site. And this is a service. How it's become a service through the employee. It's stay in Sri Lanka more than 183 days, and in the paragraph 5, whether it's a permanent establishment through a dependent agent. Then it's an analysis part of it for me to take a final answer. That's why it has done. If you really need to take it as a straight way, please take. But again, look at, I have addressed the question, the requirement of the question. Then you have to do the same thing. If it is given by analyzing the Article 5 years, you have to do same thing what we have done. It is a compulsory to mention the thing. No, no, no. No need. No need. Then if you can present it, then present it without wasting your time. Then that 2 questions I have answered. I think I have not missed anything. And. Okay. Then I need to move to the question 2. We will try to finish as much as possible with the more explanations. Then the question 2, in the question 2, then in that we have sub-requirement A, B, and C. Yeah. Then in that, which is in here, for the first A is for the 12 marks. In 12 marks, we have to do assess the balance tax payable for the quarter ended 31st March 2025 as per the provisions of the VAT Act and its amendments. Let me first do this part, and after that move to the other parts of the question. Okay. Now, this is for normal in your paper. The question 2 is from the VAT, and the tax planning and business decision making may be combined with the case law provisions. Okay. Now, come to question 2. What we have to do, we have to do the VAT calculation, and if there is a balance tax payable or refund due for this quarter, 31st March 2025, then we have to compute for the 12 marks. Okay. Then in that, the Creative Digital Studios Private Limited, CDS, is a company I'm sorry. Then, what has happened? Okay. Then it's a company engaging in the providing graphic design, digital animation, and marketing content development services to both local and international clients since 2008, again in the service sector, in the advertising sector. And the CDS has registered for VAT in 2019 and subsequently obtained SWAT registration in August 2021 as an indirect exporter. Why they have obtained the SPAT registration? The company qualified as an indirect exporter because it provides design and digital content services to several export-oriented companies. Then, as a deemed exporter, then they can register for SPAT. And most most local corporate clients are VAT registered, but CDS, I'm taking the CDS. Now, don't ask the question from me why SWAT has included, SWAT was abolished. I think if there are questions like that, then I will answer after the question. Huh? Then most local corporate clients are VAT registered, but CDS also provides services to small businesses and individuals on VAT inclusive price basis. Then always if we have the tax invoices and we have VAT inclusive invoices. Then VAT inclusive invoices which we can issue for a person who are not registered for VAT. I'm registered for VAT and you are not a person who registered for VAT. Then under that situation, I can issue the VAT inclusive price invoice. Then in my business, I have VAT registered persons as well as the persons who are not registered for VAT. Then for persons who are not registered, I have to issue the VAT inclusive invoice. It's a VAT component embedded in that. Then you have to remove VAT component by taking the VAT fraction, which is 118 into 100. You have to take the value of supply without VAT. The section 5 of the VAT Act, which is the value of supply. In that value of supply, it should be the without VAT. Okay. Then that is for this. And the following information is extracted from the draft financial statements for the quarter ended 31st March 2025. Unless stated otherwise, all figures are exclusive of VAT. It's a without VAT. Unless otherwise stated. If something, it's very clearly given. If it is included in VAT, then you have to do the adjustment. Okay? You have to remove the VAT component. Now come to details given, which is revenue. Digital design services for VAT registered person. They are in the digital animation, marketing and design, graphic design, all these areas. Then digital design services for VAT registered companies, 16.8 VAT registered. And the design services to VAT inclusive price to non-VAT clients. For this one, you have to divide by 118, multiply by 100, and you need to take the VAT exclusive price. Then after that, digital content services supplied to exporters, SWAT indirect export. Now we have the SWAT amount, 9.4 million. Then in that, please remember at the end of the calculation, you have to take what? The refund or a tax credit you need to take. Then animation and marketing services, again, yeah, they are in that. Then animation and marketing services for foreign clients, it's a point number 3, it has mentioned, it's a 6.7 million, 6,700. It's for the animation and marketing services to foreign clients. Now you have to take your entire VAT knowledge for you to answer this computation question. Your theory, application and everything you need to take. This is totally application with the correct knowledge of your theory. Then the additional information, CDS sold used graphic design in computers in March 2025 for rupees 5.2 million and issued VAT inclusive invoice. VAT inclusive invoice issued for what? The selling of the graphic design in computers. Then it's a 5.2 million. What is this? Is this a taxable activity? Is this liable? Where are your chat box? Then, okay. Yeah, it's a taxable activity. Why? Monkey, ඔය අහලා තියෙන්නේ hope SWAT adjustment will not be uh, these this time. What is your year of assessment going to be test for your exam? Someone put your year of assessment here. After within 2 weeks exam කරන්නේ ළමයි ටික. The 24-25. In 24-25, the SWAT is there or not? Ati, Tawepa, I know it's 24-25. Now tell me, yeah, SWAT is there. It's abolition. Yes, it's abolition 30th September 2025. Then it's applicable, it's a abolition effective date is the 1st October 2025 and the gazette was issued and on the this risk-based refund mechanism, all those things were disclosed and the separate unit is there, the rating system is there, and the particular letters from the Department of Inner Revenue it has raised to the relevant earlier exporters, SWAT, and for everyone it has given it is for 25-26. SWAT abolished within the year of assessment of the 25-26, not within your year of assessment. If someone to test the SWAT knowledge of you. This is the last time. Be familiarized with these areas. Okay. Then what was my question? It was a taxable activity. Whether this selling of second-hand or used graphic design in computers taxable activity? Yes. Where it has mentioned in the section 83 in the VAT tag, which is in the interpretation section, with reference to the taxable activity, if anything connected to trade, business, profession or vocation. Then in here, the selling price it has given, and in the selling price, then it has taken to the person who are not registered for VAT. Then since it is not for the person registered for VAT, you have to again here 118 and it's multiple by 100. Please remember these areas. That's why I'm telling if you're when you're reading the question, please in a slightly in your side part, in a right hand or left hand, whatever in your paper, please write these things. Then it's very important for you to take your final answer quickly. And the 9.4 million in this one, the Roman 2 relates to digital content supplied to two Sri Lankan government exporters who provide SWAT credit vouchers to CDS. Then it's SWAT, the credit vouchers received. Then for this, please remember to take the SWAT credit. Is at the rate of the rate is the 18% and okay. And then third one, foreign service income. This is in here. The foreign service income, what it has given, the income from project in Canada was received to the company's foreign currency account in April 2025. Now, again, let me take in here, I need your answers. The foreign service income, if it is the foreign service income, what is the rate you are going to apply for this service providing company? Yeah, it's a zero rated. Okay, zero rated. Now come to the adjustment. Income from a project in Canada was received to companies' foreign currency account. Do you have to do any adjustment on this one? Read the sentence and tell me. Do you have to do any adjustment on this? No. Why? It is zero rated. It's zero rated, no? It is zero rated. Then after that, the thing is the within 6 months from the date of the tax invoice, the money has received. Then under Section 7 of the VAT Act, the zero rated supplies, it is anyway. Now, if it is the 6 month was lapsed or 6 month was expired and we have received the money, even it's a zero rated, huh? Don't go and apply the standard rate of the 18%. It's a zero rated. But the only thing, if the money has not received within a 6 months period from the end of the taxable period in which that original invoice the relates, then in that situation, which the relevant, if there is a relevant input VAT, then we cannot claim. Only thing is that the lot of students, they are not taking it as a zero rated supply and they are applying 18%. Don't do that kind of things. The law has not given such provisions. Okay. Then for this one, it's only zero rated. We can take it. Now come to second one. Income from a project for a client in Dubai. Again, I'm in here. The amount into 2.2 million. Since in here 2.2 million given, the total amount 6.7 million given. This is 2.1. The balance is the amount relevant to this. Then income from a project for a client in Dubai, amount into rupees 2.2 million was settled through the client's Sri Lankan agent. For this one, is this zero rated? Or is this what? Exempted. It is exempted. Okay? Okay, yeah, it is exempted for your question, madam. VAT inclusive means the partly serious purchase goods or services. Darwa, this is not purchasing, no? This is you're looking for revenue for sale. Then I can sell or I can do my services to a person who registered. For example, for the corporate clients, their companies normally registered for VAT. But again, I can do the same thing for a sole proprietorship. For a partnership, maybe they don't have registered for VAT. Then under that situation, then it's my revenue. I cannot, since you are not registered for VAT, then it is, okay, it's, yeah, it is, since it is the revenue, then it is invoicing to you. Since you are not registered for VAT, how can I issue a tax invoice? Go through section 20 of the VAT Act. It has very clearly given the to whom I am going to issue a tax invoice and the nitty-gritties. Then therefore, if you are not registered for VAT, I am not in a position to issue a tax invoice to you. Then that's why it's a VAT inclusive price is there. Okay. Then I'll come to questions later. Let me complete the question. And this is zero rated. This is exempted. This is zero. Then for this one, please remember the input VAT adjustment. Please remember the input VAT adjustment in here. The sixth one, in November 2022, Creative Digital Studio, the CDS, provided digital design services worth of rupees 1,685 exclusive of VAT, then no issue, to Pixel World Lanka Private Limited, a VAT registered client. As the invoice remained unpaid despite recovered effort, it has happened in November 2022. And yeah, and as the invoice remained unpaid despite recovery efforts, CDS written off the balance as bad debts in September 2023. After 1 year, it has written off. Then after the recollections taken, yeah, and claim the VAT adjustment in the return. Okay, the write-off one they have deducted in the write-off of the bad debts they have deducted in the return for the quarter ended 31st December 2023. The same quarter claimed. Okay. However, in 18 February 2025, within our taxable period, CDS recovered 80% of the amount previously written off. Then this is the receiving of the previously written off bad debts. Then at the point of the written off the bad debts, we have taken it as the deduction from the supply. It's all these details are given section 24 of the VAT Act. Then in that, after that previously written off bad debts, if it is received today, it's a taxable supply of today at the today's rate. It's a taxable supply for today at the today's rate. Then we need to take this as the our taxable supply, and the output VAT of the 18% will be liable. That is on this, and it's on the revenue side. And fifth one, a VAT amount of rupees a VAT amount of rupees 950,000 related to local purchases of office furniture has not claimed, and as per the original invoice date, the purchase is on 15 February 2024. We are in the quarter or a taxable period ended 31st March 2025. Okay. And the original date of the invoice 15 February 2024. Then we have not claimed. This company has not claimed that amount. Then that details given for us to claim. Now the question, can we claim that? You cannot claim this one. Why you cannot claim this? The reason is it is the 12 months period it was given for us to claim the input VAT of the local purchase invoice. Now this is a local purchase invoice, but what is the thing? It has given the 12 months from the end of the taxable, it's a 12 months limited to from the end of the taxable period of that invoice relates. Now what has happened? Now this invoice is on the 15th February 2024. I'm referring to section 22.6. You all can prefer the particular provisions of the VAT Act. Then it's in the date of the original invoice is the 15th February 2024. Then the last day is on the 14th February 2025. But what is the end of the taxable period? It's the 31st March 2025. At that time, is this expired or not this expired? Then you cannot claim this. Don't claim this one. It's here. And the VAT on common business expenses, 2.3 million. Again, the VAT component given. And please understand this is on common business expenses. Then it being a common business expense, then for it's applicable to all. Then if it is applicable to all, please remember the disallowable input VAT with reference to the exempted supplies also. And seventh one, VAT on repair of the motor car used by the managing director. It's a 150,000 and supported by a valid tax invoice. Whatever tax invoice, valid tax invoice it has supported, then this is not a amount to be claimed under section 22.6 because this is not relevant to the taxable activity. Then this should be, this cannot be claimed. I'm not taking to this, adding to this and take, but I need to put a note. This cannot be claimed even it has not supported through the, even it has supported through the valid tax invoice. You cannot take this one. Okay. Then this is on the all the explanation. Then quickly I need to come for the question. Before coming to question, let me give 1 minute. Okay, now come to the answer. Okay. Then here I'm taking quickly because I have explained everything. Then I need to come to the answer quickly. Then this is CDS VAT computation for the quarter ended 31st March 2025. And first output VAT, the digital services from VAT registered companies 16.8. It's a rupees 1,000, 16,800 at the rate of the 18. Design services VAT inclusive prices, it's a 118 into 100 at the 18%. And the sale proceeds from graphic design in computers, it's at a VAT inclusive price. Then we need to take it under the without VAT. Then we should have to take the 118 into 100. Then that VAT component. Digital content service supplies to export, it's a indirect exporters to the exporters. Then it's my SVAT supply. Then it's 9.4 million. It's 18%. Then it's a 1,692,000. Then please take this refund when it comes to tax credit. Then the next one, the animation and marketing services to foreign clients, money received in April. I have just put that it's not any impact to recognize it as a zero rated or not. It's a zero rated. But for explanation purpose, I have taken this. Then it's a value of supply. It's a total value of supply. It has given here the 6.7 million. From that, the which is the this part. Okay. Then from that 2.2 million it's given separately. Then the balance is here. Then balance I need to take, it's a 4.5 million, then at the rate of the 0%. Then the animation and marketing services to foreign clients, the money received in LKR, services provided to foreign clients to be utilized outside Sri Lanka because it's in Dubai. But the funds have been received in local currency. It's exempted under first schedule, part 3, subparagraph B, and in the para 8, I think, then it's exempted. Then this is the exempted supply, the 2.2 million, and receiving of previous written off bad debts given in section 24 of the VAT Act. Then these are my total and all my the turnover, supply, and the output VAT. And the total supply together with this two, and the input VAT related to common expenses, it has given in the question 2,390. Then it is there. And VAT related to purchase of furniture cannot claim not a valid tax invoice under section 22(6). Then VAT on repair of the managing direct motor vehicle cannot claim again section 22(6). Then total input VAT, it is here. And the disallowable input VAT, which is common input VAT on exempted supplies. In the common input VAT, in the exempted supplies, then we need to take, please understand, we have the bad debts which is received. Then for bad debts, we did not incur any input VAT related expenses in this quarter. It has received. Then this common input VAT, I have put here, which is it's an assumption. If you have a valid assumptions which is compatible with the question, please put. This is really a valid assumption because in early, latter part of the 2022, this happened. And in 2023, September, the write-off happened. And in 2025, it has collected. Then this quarter input VAT, it is not relevant for this bad debt recovery during the taxable period of the 31st March 2025. Then it was assumed that no common input VAT incurred on the recovery of bad debts which was previously written off. Okay, but this disposal of the sale proceed from the computer, didn't I take that? Yeah, this one. For this one, this is common input. Maybe the advertising may be there, then we don't know. Then it has taken as the absorbed one, but for this, this part, it has not subject to input VAT, which is applicable for the quarter ended 31st March 2025. Okay. Then common input VAT on exempted supplies, we need to remove that. Then here, this is my, if I have quickly taken, this is my total input VAT from the total input VAT. Then I need to remove, I need to take my total output, total sales in that from the total sales. This one I need to remove, and this divided by this one, it should be multiplied by 2.2. Okay, then 145 49. Then this is the common input VAT on exempted supply to be disallowed. Then this is allowable input VAT for the period. Then in that, which is the this is my allowable input VAT for that 3 months period. Then on that zero rated and SVAT supply I have to apply. We have zero rated supplies in here, this one, and the SVAT supply, this one. This is the total, and this is my allowable input VAT. Then from this, my total supply, again in my total supply, I cannot take exempted one for this one. I need to remove this because no input VAT we have absorbed to that. Then we have the 2.7, and it should be divided by this one and multiplied by this. This is the apportionment. It's a 919 and not belonging to, I think you all so familiarized with this formula. Please apply these things. Then not belongs to above or 100% of the output VAT, which or balance from above, whichever is lower. Then this is the 100% of the output VAT. This is the balance from above, which is a 2,785 minus 990. Then again, the total is coming to here. Then after that, the VAT payable is this is my total output VAT, and this is allowable input VAT. Here we go. This is my balance tax payable. SVAT credit voucher value, what we have taken in here, because both companies given us the credit vouchers. Then we have to take the VAT payable. VAT payable is there. Okay. Now let me quickly come to your questions. Okay, this is output. Madam, is this foreign cash April 2025, but question given to compute? Yeah. Then what's the relevancy of this? It is given in the question. It's a foreign, it's a money received. Then money received is on the April 2025. Why it has given? What's the reason? එහෙම නොදීන තිබ්බනේ. Well, that's why when coming to the question, I have explained that. Two, what's the provision for me to allow the input VAT relevant to the export? The provision is in section 22(6), subparagraph 6. It has given the export proceed should be received to us within 6 months period from the end of the taxable period that invoice relates, that export invoice relates. Now we have made the supply is on March or February within these 3 months, and we have received it on April. Then don't we receive it within the 6 months? It has received. For prove that the details were given. Then next one, yeah. Can you explain adjustment number 5 again, which is on this 950,000? Then what is the local tax invoice to be a valid tax invoice? What is the period to be it's given in that period to be claimed? Then it is 12 months from the end of the taxable period in which that the invoice is relates. and it's a link to the return filing also. But the earliest occurrence it's a something which it's a first happening is the ending of the taxable period. Then in that, this invoice is related to February 2024. Then that is now we need to first count 12 months. Then if it is in the 15th February, what is the date? It has given, it's 15th February 2024. Then it being the 15th February 2024, the 12 months is coming to the 14th February 2025. That 12 months, okay. But what is the end of the taxable period? The date is the 31st March 2025. Then the 12 months should be compatible with within the, taxable period. Now, when it comes to 31st March 2025, the February invoice at the end of the taxable period, 12 months, not 12 months, it's 13 months. It's lapsed, it's expired. Then we cannot claim this one, okay? Then 2003, 2,390, what is the amount taken? Oh my goodness. Thank you for that. It's a paper it has given. Wait. The paper it has given 2,390. Okay. Then I think 2,390, this is there. Yeah. Thank you for that one. And what next? Which is why can't you claim? I have explained. Invoice in the case of 12 months input tax period, end of the taxable period of invoice was 31st March 2024. No. I think you all understood the provision in a little bit of a incorrect manner. Please go through the act and check this. For it is for the input VAT, we are looking for a end of the taxable period, which we are claiming. Not that in the earlier taxable. We are looking for the date of the starting from the date of the invoice. It's not from the taxable period. Then please go through that again. Then I have made my mistake. Thank you for highlighting that. And regarding non-claiming of directors' repair charges, do we have to write that in the answer? Yes, please write, because one adjustment is given. No, if there is adjustment given, then you should have to have a proper reason to take it or not to take it. Then please write the reason. It is for the traveling purpose motor vehicles, which is on the input VAT we cannot claim, and on the other hand there is other provision which is the it's not directly connected to the taxable activity, but it is commonly there, but it's very clearly for the traveling purpose motor vehicles, the input VAT we cannot claim. And yes, I am sharing. Bad debt, the section is section 24. Then that's why it is given here. The section 24, can you see? The section 24, please go through section 24. It's everything is there. Okay. Then that is on the VAT question. This is not difficult, but if you have make the these adjustments maybe in an incorrect manner, then it will be make the end answer and the application gonna be wrong. And again, for my mistake, I'm apologizing. And the next one in the paper for 3 marks, what it has asked, what you have to do. The CDS, our company, is in the practice of making payments for value-added tax only at the end of the each quarter. Discuss the implications of these patries under the provisions of the VAT Act and its subsequent amendments. You are, again, the action verb is discussed. You have to argue with the logical flow. Your answer should specifically address the statutory due dates of the VAT payments and the penalties applicable in the case of the non-compliance. Then what you have to tell, then whether their patris is correct or wrong. Now tell me whether the patris is correct or wrong. What's your opinion? How you are going to discuss this? They are making the payments on the at the end of the quarter. Sorry. VAT and subsequent amendments, what they are doing, it's a patris is making payment for value added tax only at the end of the quarter. Any answer? Is this correct? Need to pay monthly. When and how? How means not the method of payment. I'm asking it's a which is on the, at least tell me when. How many when? All of us are in Sri Lanka, but how many when here? 20th, 30th, 15th. I got before 20th next month. End of next month. Hane lavai before 20th of the following enough. Huh? The correct answer is the now we are looking for a quarter now. Then for the quarter we have 3 months. Then in that the 3 months we have to take the first month and on or before 20th of the next month. The second month next 20th. The third month next 20th. And then like that we have to make the payment. It's clearly given in the section 26 of the VAT Act. And again, non-compliance of this one is subject to the penalty, which is we are become a defaulter. Then in that, the section 27, then we need to apply. Then come to this, it's for the 3 marks. Then now why this? Then if you have look at the at least 3-4 papers in this curriculum, it's taking not 3-4 in a very recently. If I have taken all the papers, then this benefit it has given to students. What is this benefit? Taking your open book referential material benefits. Then you to apply, not just writing of the mere theory, huh? Then you to apply this to the given scenario, which it has very clearly mentioned that use your open book referential material because these are very straightforward. For the 3 marks, then this is very straightforward. Section 26 and section 27. If you know the thing, the payment of VAT, the 20th or no before the 20th day of the subsequent month, for taking this example for 31st March 2025, how it come in, and section 27 application. Okay, then for that, this is the answer. Here, straightforward, clearly. Then since I have explained, I'm coming to the answer directly. As per section 26, payment of tax, tax in respect of any taxable period shall be paid not later than 20th day of the month following the end of the taxable period. Then special rule for the quarterly taxable period. It's given interpretation in section 83B, where a person's taxable period fall within the definition in that for the 3 months period. Now I'm addressing my part for my company, the CDS. The tax in respect of any quarter commencing on or after 1st January 2026, it's from the long time ago, this is a process, shall be paid subject to final adjustments made with the submission of return in the following manner. How? The tax payable for the first month of the taxable period shall be paid not later than 20th of the second month. Now, like that in the 3 months, we have to make the payment. එහෙම කලේ නැත්ත. If you have not done so, what's the implication? Default in payment. All these things are in the section 26. Default in payment, any tax not paid in accordance with the above provision shall be deemed to be in default. The person liable to pay such tax, or where the liability rests with the more than one person, then each person it's a considering as a defaulter is a jointly is liable to make the payment. And if it is so being a defaulter, what is the application of the penalty? It's a penalty is in the section 27. Then that non-compliance with the payment, the default being a tax in default for the VAT. Then in that context, the first the 10%, and after that for the each month or part of the month it's a 2%, it's given in the section 27. It's a as it is. And the what is the maximum penalty application is the 100% of the additionally assessed tax or additional VAT on the maximum penalty is the up to that amount, not more than that. This is on section 27, and that's all for this 3 marks. These are not difficult, but for you to at the exam, if you can use these things through your open book referential materials and write and apply to given scenario, then it's excellent for you to take the 3 out of 3. Okay. Now come to this C, which is the yeah. In that, what is asking, let me come to entire question for the 10 marks, and I need your views. The detailed answer is there, then you all can refer to the detailed answers, but I need to have a quick chat with you all on this Roman 1, 2, 3 and 4. It's for your own benefit, okay? Then the C, during the financial year ending 31st March 2025, Creative Digital Studio Private Limited CDS plans to implement the following strategic initiatives. In that first one, the company intends to revalue its sole office building. They have only one office building. Then the company intends to revalue its sole office building, which was constructed to state-of-art standards, to ascertain its current fair market value. This is the first strategic initiative. Second one, the CDS will allocate rupees 5 million towards marketing expenditure aimed at promoting the strengthening its brand presence in Canada. The company plans to acquire 20% equity stake in a Maldives-based entity engaged in the same line of business with the objective of supporting the foreign expansion strategy. The vertical integration, they are going to go with the foreign business. And the fourth one, CDS proposes to dispose a bare land purchase in June 2019. Why they are disposing as part of its asset, the rationalization program. These are the 4 options, 4 decisions taken by CDS. What's the requirement? Then evaluate above 4 proposals by discussing the following as relevant as per the provisions of Inland Revenue Act number 24 of 2017 and amendments. Implication on capital allowances, claiming of capital allowances related to this. Application of income tax exemptions, need to look at. Deductibility of expenses when computing business income. Realization of capital assets. Application of tax rate. Now these are the 5. Now we will start the discussion when it comes to first one. Okay. Then section 26, 1 of the VAT Act, it says not later than last day of the following month. Daru, please check with the amendments. Please check with the amendments. There is no the last day of the not later than last day of the following month. This is applicable for the return filing. Please check the VAT Act with the amendments. There is no such provision. It's a 20th day of the next subsequent month. We have to make the payment. It's 100% clear, and in practically we are doing the same. Then no change for that. Please refer to the law again and check where you have make this wrong. Please understand the correct provision which it has mentioned in the section 26. Then that is for this one. I need your answers. For this one, the company intentions to revalue its office building, which is constructed to state art standards. Then on implication of the capital allowances. What is the implication on the capital allowance on the revaluation? What is the implication? Any implication or no implication? No. Why no? Why no implication? You have to justify your answer. What's the reason? Okay, keep it aside at least. So short answers I need. For second one, 5 million towards marketing expenditure aimed at promotion and strengthening its brand presence in Canada. Is it deductible? Is it no building for business purpose? I didn't get you the row. Then it's keep this first one aside. In the second one, tell me this marketing expenditure, deductibility of expense when computing business income. Can deduct or can't? At least a short answer I need. One is no, no. Delaney is no for the first or second. Allocation, no. Can. Can't. Why can't? Yeah, answer you can't. Why? ඒකනේ ඉස්සෙල්ලත් no why කියලා වහම no answer. Then yeah, it cannot be deducted because it is an allocation. It is an allocation. Will allocate. This is it's talking about the strategic initiatives now. Then it is the don't take that word in a different manner. They are taking decision. They need to allocate 5 million and they have to spend it for what? For the promotion and strengthening brand present in Canada. They have not spent, but they are going to spend. Then come under that situation because it is an allocation. Then okay, it cannot be deducted. It cannot be deducted. These are the implementations. They are going to take its production of income. No. Okay. Okay. Enough for that one. For that one, it is asking for company plans to acquire 20% of equity stake in a Maldives-based entity engaging in the same business. In that, tell me what's the implication? What is the implication on acquiring of the 20% equity if they have acquired? What's the implication? Tell me based on the 24-25 year of assessment. Anything on that? It's from this application of income, any income tax exemption on that? Don't think about from the deduction perspective. There are Roman 1 to 5 options given. Then you have to suit. More than 10%. More than 10% what? More than 10%. I know what's the provision you are telling. But what's on what? There are two in that provision. There are two exemptions given. If it is a not more than 10, it's a 10% or more. Then only- okay, keep that one aside. And the fourth, uh, disposal of bare land purchased in June 2019. Then it is a realization of land. Then on that, what's the tax implication? Realization of land. Is it an investment asset or a capital asset used for the business? Depreciable asset? Land එක? How land be a depreciable asset? No tax. Investment asset. Capital allowances. Land is tax exempt. මම යනවා ළමයි ඔළුව හැරිච්ච අතේ. Then now, now the thing is, this kind of the proposals, if this kind of the things were tested in the writing part for 10 marks, you're writing your capital gain tax. For the fourth one, I have received the answer. The capital gain tax at the enough. Now let me close this chat box. Okay, then when it comes to this kind of the provisions, then you have to write it's for the 10 marks, then 4 given, at least for one, it's a 2.5 marks will be allocated. Then these are very technical areas which you really need to address. Okay, then let me come to this. I'll explain one by one, which is in here. Company intends to revalue its all office building. The revaluation is something we need to take it to the fair market value. Then it is not impact to the capital allowances. Why? Now you have to justify, you have to write the revaluation is not impact to the capital allowances. Capital allowance calculation or a claiming of the capital allowances. Then why you have to, now you have to justify. Why is that? The justification is coming that the reason which is we are claiming of capital allowances on the depreciation basis, or I'll tell the depreciation basis of the depreciable assets. Where it has mentioned to claim like that, it has given in the fourth schedule. Then you have to link to me to claim capital allowances under fourth schedule. What's the section it has given? In the specific deductions under section 16. Under section 16, it has very clearly given the capital allowances and the balancing allowance can be deducted. Then in the capital allowance, the calculation and everything it has given in the fourth schedule. In fourth schedule, it has given the capital allowances shall be provided to the depreciable assets at the end of the year of assessment on their depreciation basis. Then when we are doing the revaluation, is it impact to the depreciation basis? No. That's the point you have to take. That's the first one. Second one, which is the marketing expenditure. Now they are going to allocate, they need to allocate 5 million to do this. Then the marketing expenditure. What is the, do we have a separate provision for marketing expenses, separate specific deduction for marketing expenses? Yes. What is that? Section 15A, the marketing and communication expenses. Is this in line with this? You need to look at. In marketing and communication expenses, expenditure aimed at promoting and strengthening its brand presence. The promotion, the brand promotion campaign, for that the activities, the 5 million they are going to utilize. In where? Canada. Ahanava, after utilization, whether can it be deductible? No, this cannot be deductible. What's the reason? because it's in the marketing and communication expenses, which is in section 15A. Then it has the definitions of the what should be the marketing and communication expenses. Always you have to write from the theory areas from the act. Based on that only we can make our opinion. Then therefore, in this one, it has very clearly given even in the capital nature, the Markham expenses we can deduct. But the definition or what should be the marketing, it should be means. There is a restrictive definition. You cannot go other than this. Then in that it has given the carrying out the market research by such person or by institution in the Sri Lanka on his behalf. This is not a market research. And B, the development or production of marketing, advertising and communication campaign to the extent that such development or product is carried out in Sri Lanka. What we are going to do? We have to, now we are doing the increase our brand presence in Canada. Then for that we have to do the marketing or advertising or communication in the campaign. Then in that, it should be extend that the development of production is carried out in Sri Lanka. It should be done in Sri Lanka, but where now we are going to do? It's in Canada. Can we deduct this? No. Then always you have to quote from the section and then you have to apply. And when it comes to this third one, the acquiring of the 20% of the stake of a non-resident company. Then on the other hand, it is what? It is of my foreign investment. If it is a foreign investment or it's my foreign operation, then from that 20% I am receiving foreign source, the income. In that foreign source, it is exempted up to 24-25. This is the last year for test for a foreign source and the foreign service exemption under third schedule para U. Then in that, whatever the income it's receiving, if it's receiving in 24-25, it is exempted, but in after that, 25-26 onwards, it's a 15%. It's applied. And this 20% equity we have invested. On the other hand, on the investment, what's the return we are receiving? It's a dividend. Then dividend also we can consider as a foreign source, as well as we have the, in the third schedule para R, we have what? The substantial participation. In that, not only for dividend, even for gain from realization of the shares. The exemption is there. Now here we are in the substantial participation. Then it is exempted. And CDS proposed the disposal of the bare land, the disposal of bare land. The land which we have not used for the business. It's idle land. Then this is what? This is investment asset. Where investment asset defined in section 195. The investment asset it has defined. In that, if the disposal of the investment asset, you are subject to capital gain tax. How to compute capital gain tax? The section 36, 37, 38. And again, when it comes to this transitional provision on the 30th September 2017 valuation, anyway, it's not coming because it has acquired on the in June 2019. Then we can take the cost. And being a company, the applicable tax rate is at 30% for the gain from realization of investment asset as per the first schedule. Then you have to mention these things when the writing part, again when it comes to third question part, be that in the writing part after that part A, students, which is the commitment and the answer writing is maybe poor. Then when it comes to answer writing, please do like you are doing the calculations. Okay? And these are the 4 explanations on this 10 marks, totally taking the provisions of the Inland Revenue Act. Okay? This is coming under tax planning and advising and the taxation and business decision making in your curriculum, that 2 areas. Okay? This is the end of the question 2 discussion. Any questions up to that? Any questions up to that? I think no questions, then I can move to the question 3, which is here for that answers it will be provided to you all, which is in the company tax question, and it's based on the pre-scene which is applicable for the June 2025 examination. Okay, meanwhile give me 5 minutes, I'll come. Okay, we will start the last question of the paper, the question 3. Before starting this question, I really need to give advice for you. When it comes to actual exam, don't waste your time on this question. It's a 30 marks. I know it's the highest marks allocated question in the paper. Then it's 30 marks, and it's a maximum time is a 54 minutes. Then it's at 54, I think, yes. Then therefore, more than that, please don't take much time on this, because as the patries, as the past patries, which I have after exam, lot of students telling me, I have done the question, I have started with the question 3, I have done the question 3 for 2 hours, then uh, I didn't have time to attend in a successful manner for other questions. then please don't have that situation for you at your examination. Okay, then the managing time is compulsory. Managing time is compulsory. Now come to this, which what you have to do is the assess the balance income tax payable or refund due of STL in respect of year of assessment 24-25. Okay, this is what you have to do for the 30 marks. Time is the 54 minutes. Then come to this quickly. This is the pre-scene for June 2025 examination, and if I had taken the pre-scene analysis in quickly, this is the real world example in last time. It has tested, which is the dialogue. It was the real example. Then this is the company, Scientel Lanka PLC, and in our unseen, for the mock, for the entire discussion, I'm using the name STL. And what is their principal business activity? The largest mobile operators in Sri Lanka. And these are the details available. And there's a group structure. In here, I need to concentrate on this too. The Scientel Lanka PLC, which is the holding company, is at Singapore company. And in here, which is the two subsidiary companies of STL is there, which is the Payphone Private Limited and the Vista TV Private Limited, like Dialog TV and the Dialog CDMA, and like that. Then this is the structure, and the Singapore the Telecom PLC, it's a non-resident, and for Scientel is a resident company, subsidiary of the Singapore company, and a Payphone Private Limited and the Vista TV Private Limited, both are resident companies, and they are subsidiaries of the Scientel Lanka, and it's been they are indirectly associated persons as per the provisions of the Inland Revenue. All three companies are the associated persons under Inland Revenue Act. These details for our computation perspectives and for the details. Now let me quickly come for the question. Then in addition to the information provided in the common pre-scene in relation to Scientel Lanka PLC STL, the following additional information for the year ended 31st March 2025 is made available. Then the detailed unaudited income statement for STL for the year ended 31st March 2025 is given below. In that, I'm starting from this one, the profit before tax, 10 million, it's all in millions. Then it's a 10,154,000. Then this is where I'm starting from this one. It's a profit before tax is here. Then we need to take that. This is on the business income computation. Either you can go for the plus minus, but this is not the way which in practically we are applying. It is for the add and less format we are taking, but in the exam perspective, I have taken this. But if you are not familiarized with this method, yes, of course, you can start it with the profit before tax and the allowables and or disallowables and allowables you can take. Okay. Then first I need to compute the business income. Then afterwards I need to come for the investment income and the tax computation. Okay. Likewise, it's a flow. Then I'm starting from here. And after that, which is the direct cost is revenue, direct cost, gross profit, administrative expenses, all are presented in the notes, and the selling and distribution cost. And we have impairment loss. Impairment is a provision under section 10 disallowable expenses. Any provision we cannot deduct, then 485 we need to disallow. Then here it's an impairment loss, it should be disallowed. Okay. Then Okay. Then the next one, the other income is there, and the finance income, finance cost, net foreign exchange gain or loss. Then now it's a gain now, and the profit before tax, our starting figure. From this one, everything taken. And what I am doing, I need to read the question and starting from the adjustment and coming to one by one. Then other income, we have dividend income, then profit on sale of fixed assets, exchange gain net, then which is the uh, rent income. Okay, and extracts of certain expenses uh, recorded under direct cost, administrative expenses, and selling and distribution expenses. It's a direct remuneration, salaries and wages, TRCSL, spectrum usage fees. These are relevant for the industry. Okay, annual operating license fee, satellite bandwidth charges, and the network maintenance cost and the depreciation. And amortization of ROU assets, site rent expenses, provision for retirement benefit, bad and doubtful debts, professional fee, legal fee, staff welfare, and the provision for slow moving inventories, maintenance costs, CSR expenses, fines and penalties, license fee, marketing and advertising cost, research and development, improvement cost, and valuation fee. And the finance cost details were given, finance income details given. Now I'm starting from the information, the additional information. You are provided with the following further information. An impairment loss has been identified against the telecommunication towers. We have done that. Payphone Private Limited has declared dividends during the year of assessment, and the relevant WHT has been deducted and paid to the IRD. Other than that, no dividend income received to STL. Now you know Payphone is one of the subsidiary companies. Then they have declared the dividend and the relevant WHT paid. Then the dividend declared through the profit of them. Then the dividend income, 50 million, it is the investment income of the company. It is included in the profit before tax. Then I have to remove that. And under investment income, I need to take dividend paid out of the profit. It's a final withholding payment it has done. And the next one, which is the company disposed of the following two assets during the financial year ended 31st March 2025. Then types of the asset, sophisticated network equipment, which is two routers, and this heavy truck. The year of purchase are there, then the cost and the consideration is there. Then what you have to do, you have to compute the balance in allowance or accessible charge. Then come to that calculation. Then here under the business income, okay, then under the business income as the workings, in here the consideration it has given in the question 310 and 412. Then here consideration and the cost of the two assets were given, which is in here the network equipment 250 and the heavy truck 320. 250 and 320. Now that this has purchased in 21-22 year of assessment, then 21-22, 22-23, 23-24, almost 3 years the capital allowances given. Then here the tax written down value is 100. Then my consideration is 310. My tax written down value is 100. Then I'm ended up with the accessible charge. And on the heavy truck, it has purchase on 21. Yes. Then in that 2021, 21, 22, 22, 23, and 23, 24, almost 4 years, the capital allowances were granted. Then year of disposal, no capital allowances. Then here, this is my the tax written down value. After that, this is my assessable charge. Then this is the total of the two assessable charges. From the both of them, we have the assessable charge, then heavy truck and the sophisticated network equipment. Then it's a 558. Then in this assessable charge, it's a 558. Then from that, we have done, and not only that, under other income, then we have profit from sale of fixed asset. It's a 16. It should be removed from the profit before tax. And the next one, which is the next adjustment, this is done. And the exchange gain in the net amount after adjusting both exchange gains and losses, details of which are as follows. Then the realized gain related to receipts of debtors, realized loss relating to settlement of the creditors. Now this is realized gains and realized losses on the transaction. Then therefore ultimately by settling of this, we have 10, which is the loss. Then this loss, it is a realized loss, it can be deductible. Then when it comes to that here, which is the exchange gains and losses, where it was. Then, okay. Then the net exchange gain, exchange loss, realized exchange loss we have to take here. Then, yeah, here. Then net realized exchange loss, the loss is 30 and the gain is 20. It's a deduction from business income. It is already deducted. Now you don't have to do anything on that. And afterwards we have unrealized exchange, unrealized gain net, which is relating to debtor and creditor. From that, debtor and creditor, it's a after losses and the gains, the net gain is there as at 31st March 2025 on the foreign debtor creditor evaluation, and the unrealized loss relating to valuation of foreign currency denominated accounts. Then for the conversion again, then in that realized unrealized gain is there and loss is there. Then in that we are at the end of the, we have the 70 million of the unrealized gain. Any unrealized gains are not subject to tax. Please understand, any unrealized gain, these are only conversion. Then therefore this 70, now it is included in our profit before tax. Then we have to remove that here, which is the net unrealized exchange gain, not part of the business income. Okay, this is there. And the next adjustment, it is for this. Then the rental income represent the revenue earned from leasing excess capacity on the company's telecommunication towers and rooftop antenna sites to other license operators. The standard monthly charge is rupees 160,000 per tenant per tower and rupees 110,000 per tenant for rooftop antenna placements. The rental income received after deducting WHT. Why you can see it's the two rents, it is the more than 100,000 per calendar month. Then this entire rent income from what? The leasing excess capacity of the company's telecommunication towers and the rooftop antenna sites. Then in that this is effectively connected to the business. That's why in pre-scene, even this time pre-scene, which the industry knowledge, the healthcare sector is in this time it has tested with the hospital. Then in that your knowledge on that particular industry should be there. Then for this in the rent income, when it comes to rent, in here it's 160, it's effectively connected to the business. Then in this, which is the rent income, it's effectively connected to the business. I think somewhere in here it is there. and I need to take this rent income even it's effectively connected to the business. Don't forget to adjust the what? To adjust the withholding tax, because in the question it has very clearly given the withholding tax has been deducted. Then it is what? It is a tax credit. Then under tax computation, you have to take the tax, withholding tax on rent you have to take. Then it is the amount is on 160. On that, the 1% you have to take. Okay. Then that is about the rent. And next one, apart from the sum of rupees 520 million, advance personal income tax has not been deducted on the remaining balance of the director remuneration. Now, in the director remuneration, there is a 620 million. From that 520, the properly APIT has deducted and everything done, but remaining 100, no APIT it has deducted. Then here, the apart from sum of rupees 520 million, advance personal income tax has not been deducted on the remaining balance of the director remuneration. It is subject to deductible. That's why it has given. Then it's subject director being the salary anyway in this year of assessment, it's a which is the 100,000 and above. Then therefore, which is very clearly the relevant part of the APIT has not deducted. Then under section 10 subsection 2, then it shall be disallowed. Then here, which is the director remuneration, APIT has not been deducted. This is there. And next one, which is the advertising and business promotion expenses were incurred on staff recruitment, commercial advertising and television advertising in television and social media, all incurred for the production of income. Staff recruitment, commercial advertising and television and in social media, these are under marketing and communication expenses. Then in that, it's covering that, and staff recruitment incurred for the production of income. Then all these things under the specific deduction of the section 15A as well as the main deduction of the section 11, then it has incompatible with. Therefore, which is the marketing and advertising cost 9,940,000, then it shall be an allowable deduction. Then marketing and advertising expenses, which is the advertising cost incurred for the production of income and marketing expenses satisfy the section 15A, then this under this the total expenditure is an allowable deduction. And the next one, which is the in here, the gratuity paid during the year of assessment 52 million, very easy. In each and every paper, this is there, the payment of gratuity. And not only that, in the income statement, now I need to go and take the gratuity expense, Then in here, provision for retiring gratuity, 120. Then I need to take 120 here. Okay. And next one, which is the license fee includes payment relating to the purchase of software license internationally. The royalty payments made to Singapore Telecom PLC, the relevant WHT as per Singapore DTA has remitted when payments were made. License fee, this is the expenditure. Then in that, which is the relevant WHT, which we need to pay, it has paid to as per the Sri Lanka and Singapore DTA. Now, you know in the license fee, it's a royalty. In that sense, the 10% it has deducted. Then therefore, all the details are there under section 10 subsection 2. If that relevant part of the expenditure, the relevant WHT, if it is deducted and remitted, then we can deduct that. Therefore, in the license fees, it is an allowable deduction because it's incurred for the production of income and as well as the relevant WHT has been deducted. Okay. And then the bad debt provision is stated net of bad debts written off, it's not be the net of. The bad debt provision is stated stated with bad debt written off, not the net. I stated with bad debt written off amounting to rupees 10 million. However, STL has not undertaken any recovery action in respect of these balances. Now, when it comes to this bad and doubtful debts, in that 980 is there. From the 980, the 10 is for the write-off and the balance 970 is for the provision. Anyway, this provision, it shall be disallowed. Then 10, it's a write-off of the bad debts, no legal action has taken. Then in that context, this 10 million also disallow, 970 also disallow. Now think in this manner, if the question has given that bad debt written off of the 10 million, the relevant legal actions were obtained. Then in that sense, this 10 million you have to remove from this 980 and only 970 should be disallowed. Then based on the different scenarios of the question, you have to apply. Okay. Then in here, the bad debt write-off and the bad debt provision. Then in the bad debt provision, it's a 970, it's disallowed. Bad debt write-off, it's also disallowed. The total 980 should be disallowed here, based on the details of the question. And then, which is the next adjustment, staff welfare expenses include a compensation payment of rupees 1 million made for a former employee in recognizing of his economic circumstances. The payment was made in cash and deposited directly into the employee's savings account. Payment made in cash. Payment was made in cash and deposited to the employee's savings account. The original deposit slip is there. What has happened? This compensation in the staff welfare, it includes a 1 million. Now in staff welfare, it is here in that staff welfare for this one. What has happened? The 1 million, it was incurred as a compensation. Compensation paid to whom? Employee paid how? It's a paid in a cash. Amount is 1 million. Can be deducted? No, it shall be disallowed. Then here, staff welfare section 10(2)(a, made in cash, it's rupees, it's 50,000, sorry, 500,000 no more, it's a 1 million, then it shall be disallowed, it cannot be allowed to deduct. And next one, which is a withholding tax, has not been deducted on site rental expenses despite the fact that monthly rent for each of the 10 sites exceeds rupees 100,000. Now this is on the site rental expenses. Under the site rental expenses, then what has happened? It exceeds 100,000 but WHT has not deducted. Then total expenditure you cannot allow to deduct. Then here the site rent expense 1,124,000, then you have to disallow. It is 1,124,000, it shall be disallowed. And next, which is the valuation fees were incurred in connection with the valuation of newly acquired land. There is a land acquired newly, the valuation fee on that. The valuation fee, if it is on the newly acquired land, then it is what? What nature? Capital nature. Then it should be disallowed. In here, the valuation expense is a capital nature. It should be disallowed. And in the valuation fee in the P&L, 4.8 million. Okay. And then the network transmission equipment acquired during the year of assessment 2018-19 at a cost of rupees 28 million was upgraded in the current year with advanced modules and enhanced capacity and at an additional cost 15 million. Now what is this? This is on the application of the section 14, which is the improvement expenses. Then when it comes to P&L, improvement cost of 15 million is there. The improvement cost 15 million is there. For this, what the adjustment you have to do? This is purchased in 2018-19. Then we have to, when we are looking at the previous year's tax written down value, for this one, do we have a previous year's tax written down value? No. Because this is what the network transmission equipment. Then being a network transmission equipment, then its a useful lifetime is 5 years. Then 18, 19, 19, 20, 20, 21, 21, 22 and 22, 23. On the 5 years, 22, 23, it has gone. Then we are in 24, 25. When it comes to previous year's tax written down value, it's 0. Then thereby, there being a 0 was the provision given through the act. Then we can go for the equal 3 years of the period and other part should be disallowed. Now come to this. This provision you should know very carefully in here. Improvement cost network transmission equipment purchased in 2018-19. Then previous year tax written down value it's a 23-24. It's 0. And actual improvement cost charged to income statement it's a 15. Maximum allowable improvement cost, it's not the finance cost, the improvement cost, maximum allowable improvement cost as per section 14, it's 5 because this need to be divided by 3. Disallowable improvement cost for the year of assessment 24-25, it is 10. Okay, then this is on that. Then we have to disallow the improvement cost. Disallowable improvement cost is 10. And please remember this adjustment, this has tested in your earlier papers. Then therefore, please in alert on these areas. Okay. And next, which is the right of use ROU asset and corresponding lease liability represent the SLFRS 16 adjustment in relation to lease agreement entered into the use of premises in different part of the country. The actual lease rental paid during the year 1,050 million. Then here the 1,050 million, it is a actual lease rental. We can deduct that. Then this is that 1,050 million. And which is afterwards, all the adjustments relevant to ROU I need to do. Interest on ROU lease liability 106. Then that 106 I need to disallow. Not only that, the amortization of the ROU is a 7.8 million. This 7.8 million also I need to disallow in here. Then it's a latter part in here. Okay. Okay, done. And next one, which is the R&D expenses were incurred in developing innovative network optimization solutions aimed at enhancing transmission capacity, improving connectivity, and strengthening overall service reliability within the telecommunication sector. All it's a compatible with what's the section? Section 15 R&D, which is on the improvement of the process. The process improvement, it can be done through the in-house or else through the research institute, but seems to be they have done through in-house. Then this is R&D in your income statement. Then total amount, it should be an allowable deduction, which is 348. Then when it comes to the R&D expenses, it is there. And the next one, which is the CSR expenses incurred during the year for a donation made to the Ministry of Health in support of public healthcare initiatives. Then here, CSR expenses, which is given in income statement, CSR expenses 56.5. Then it should be disallowed. Any CSR expenses, it should be disallowed. But what's the purpose of this? The purpose of the CSR expense, it is given for a Ministry of Health. Then support to public healthcare initiative. This is up to the total accessible income you can deduct. This is the donation to government, then donation to Ministry of Health, then it can be deductible. And next, details of assets acquired during the year of assessment. Land not a depreciable asset. Then land, it shall not subject to capital allowances. Building, number of years 20. Servers 5. Computers 5. Intangible assets, then we need to look at the estimated useful life of the intangible asset is 4 years. Then we have to divide this by 4. Motor vehicles, please understand, the traveling purpose motor vehicles are not subject to capital allowances. Then we need to look at the company purchased motor vehicles amounting to rupees 40 million during the year for use by its executive staff. The remaining balance relates to the acquisition of heavy trucks used for transportation purposes. Now for this one, 40 million for whom? Executive staff. That means the traveling purpose, it cannot be subject to capital allowances. From this 40 you have to remove. And the work in progress, the tower, then work in progress tower, is it a depreciable asset? No. In section 195, the definition of the depreciable asset provided. In the definition, it has given it should be owned and used. Then this is not used for the production of income. This is not a depreciable asset. Then you cannot claim the capital allowances. Then in that, which is come to here, for capital allowances, land not eligible for the capital allowances, building it's 20 years. Then servers, it's 5. Computers, it's 5 years. System, software, intangible assets, the actual useful lifetime is 4. And the motor vehicles, motor car not eligible for capital allowances. Motor vehicles other than motor cars, then in that it is, it is 100 minus 40, and it should be divided by 5 years. For the trucks, it should be divided by 5. And WIP for towers, not a depreciable asset. Then accordingly up to this, the capital allowances were claimed. And afterwards, capital allowances claimed during the year of assessment 23-24. This previous previous year of assessment tax computation, the capital allowances, then it's were rupees 150 million. None of the assets were fully depreciated for the taxation by end of the year of assessment 23-24. Even the none of the assets were not fully depreciated, what has happened in 24-25? We have disposed 2 assets. Then that capital allowances relating to that disposed assets also included in here. Then therefore, that part you have to remove. Please remember these adjustments. Always when you are taking the opening capital allowances, if it is given from the previous year of assessment, check what are the changes happen to the previous year depreciation basis in current year. Then you have to adjust those. The 2 disposals were there. Then we need to adjust. It is 150 million. It is there for capital allowances for opening depreciable assets. Then the total capital allowances claim is this. Capital allowance applicable for disposal. We had 2 disposals. Then this is the cost. This 2 cost we need to take. Then this is the capital allowance which included in here, and the opening depreciable assets is only 36 million. Then for this capital allowance on opening depreciable asset is the 36 million. And next one, fines and penalties incurred during the year relate to delay in the remittance of EPF and ETF, contributions to the relevant statutory bodies, as well as late payment of taxes to Department of Inland Revenue. Then no issue for here, which is the penalties and fines and penalties, 14.5. Then it should be disallowed under section 10. And next, legal fees were incurred in relation to legal services obtained for the recovery of bad debts and proceedings before the labor tribunal. The total amount was paid to a legal firm registered as a partnership. Then in the partnership, always that 5% payment for the professionals, it's applicable for resident individuals. Then for the company, for the partnership, it is not applicable. Then like this kind of the provisions are there, be careful on those. Then this is incurred for the production of income, that withholding tax provision is not applicable for this. Then when it comes to the legal expenses, when it comes to legal expenses, where it was legal and professional. Sorry, it is legal fees. It is here 78.5 entirely. It can be deductible. Then in the legal expenses, allowable deduction. Sorry, it is an allowable deduction. Then it's nothing. It has to do, it's already deducted. Okay. And next one, which is the last few adjustments. The professional fee includes cash payment of rupees 2.5 million. Again, it's a cash payment, 2.5 million. It's aggregate, it's a total, it's a 500,000 or more. Then made in February 2025 to Miss Silva, a technology consultant, for advisory services relating to the upgrade in the company's IT infrastructure. The applicable withholding tax was duly deducted and remitted to Department of Inland Revenue within the statutory time. All good, but what has happened? It's a cash payment. The cash payment, it is, shall be disallowable. Professional fee should be disallowed. And next, total saving deposit interest represents the interest income received from US dollar savings accounts. Then in here, which is the interest income, in that interest income from foreign currency service, it's a 48 million should be removed from the business income, and even it will not be taxed at the investment income. Then interest on fixed deposits and the treasury bills, all adjustment in with reference to finance income I will do now. Then we have to remove all these three 800 and these three T-bill and T-bonds interest income from the foreign currency savings and the fixed deposit. All three I need to remove, and under investment income, which is the from savings, it is exempted, and the FD and the T-bill and T-bonds, it's need to be taken under investment income. But treasury bills and bonds, no WHT application. But when it comes to the fixed deposit, then the WHT credit we need to take WHT on the this one. Then it is a 200. Then in here we need to take it here, and don't go and apply 10%. Don't go and apply 10%. 10% on WHT on the interest, it will be applicable from the 1st April 2025. Then the year of assessment is 25, 26. Don't apply in, it is in this year of assessment. And the next one, which is, are we done? No. The loans obtained, and the STL has utilized loan for purposes directly relevant to the generator of the company's income. Then this, when it comes to these loans, now the finance cost we have to look at. In the finance cost, the interest on loan, this is. Now, when it comes to this question, in here, I will take the section 18, which explanations we have done for last year based on the pre-scene. Then here, this is the on the application of the finance cost adjustment, which we need to look at. Now, please take this. In that, we need to first look at whether we are in the maximum borrowing limit. It is stated capital plus reserves into 4 times. Then in the question, stated capital is given and the reserves it has taken. Then total of the stated capital and reserves 41,569 million. Then that into 4 times, then it's 166, 276 million. Now you can see these all taken from the pre-scene financial position. I'm not again go for the original pre-scene. Even in the paper, the original pre-scene is there. You can go through. You can go through. And this is in the financial position details. In the financial positions of the STL, you can see the what is the equity and which is on the company and what is the stated capital and reserves. This is the amount which it has taken and this into 4 times. It's huge. And we have the borrowing and borrowing secured and the leases I have not taken. And after that secured, unsecured for this two. And this is my actual borrowing. You can see the 4 times of this and the total of this. Anyway, we are under the maximum borrowing limit. That's what it has taken. Okay. Then this is the actual borrowing. This is the maximum borrowing limit. Then again in that we need to look at whether under unseen what it has given. In the unseen it has very clearly given that all loans utilized for the production of income. All loans utilized for the production of income. Then stopped. No. Okay. Then therefore, the total finance cost which it has given here, other than ROU liability finance cost, in this one, then adjustment done. Then all the finance cost, it should be an allowable deduction. Then here, disallowable finance cost, no, nothing. Nothing to disallow and all within the maximum borrowing limit under section 18 as per the provisions of the, in that provided information, it's compatible with the allowable deduction limit which given in the section 18. That's what it has given. Then afterwards, the total amount of 8,500 million was paid. Then why it is not coming? What has happened to my tick? Okay. Okay. The total amount of 8,500 million was made at the as the income tax quarterly installment payment for the year of assessment 24-25. Now it is my tax credit. Here the 8,500. Now I need to take the notes and check everything is good. And yeah, everything considered valuation. Provision for slow moving inventory. Any provision, it shall be disallowed. Then for the maintenance cost, there was no adjustment. 2.2 million, it should be disallowed here. Then 2.2 million shall be disallowed. And afterwards, which is the, everything it has considered and the depreciation and the amortization not considered, 5.4 and the 11,840. This is that. Then after all, then this is my total plus and minus side. And this is my business income of STL. In the business income, I need to take it here. And for the investment income, adjustments were considered. then it's 850, and this is coming to this. And after that, this is my total assessable income, and this is the qualifying payment donation we have. This is taxable income, and this is my tax liability after applying the 30% on this. Then these are the all tax credit considered. Then this is the answer. The balance tax payable by 30th September 2025, it is 2,672 million is the answer. Okay, this is on the question. Normally, if you have look at the past papers, you have to do the past papers, you shall do before your examination at least 3-4 past papers, and even in the earlier past papers there are selected questions which you can take. Please practice, because this 30 marks for you to obtain doing the past doing now some students are what they are doing is really unfortunate. They are doing the looking at the question and the answer, then what's the purpose? You are not doing the examination or verification for the question and the answer. Then you have to practice. Then therefore, please do the questions as much as possible. Okay. Then for next one, it is on the rest of the questions. Then before that, I saw some questions. Capital allowance, it adjusted. No. You need not to show the thing capitalization, because in the pre-scene you can analyze it. Then therefore you can put a note like we have done, which is since it's in the maximum capacity of the section 18, then which is you can take it as the and first thing you have to write the if all good, if all even this pre-scene it's good, because you have to write first that maximum borrowing limit, where the company is within the maximum borrowing limit as per the act. And then you need to look at on the section 12 application whether it has incurred for the production of income, or if not, that particular borrowing utilized to acquire an asset where the asset now is used for the production of income. If one of these satisfied based on the unseen information which in your question, then you can put that and conclude the total finance cost shall be an allowable deduction. Okay. For this one, Mohammed, I have made that correction, which is on the it's 100 minus 60. It's not the 100 minus 60. It's 100 minus 40. Am I done it as the 60 in here? No. It's 100 minus 40. Why it's 40? It's a 40 million is on the which is on the motor vehicle for traveling purposes. The 40 million, the company purchased motor vehicle amounting to rupees 40 million during the year for use by its executive staff. Then it's a traveling purpose, then it needs to remove. Okay. Then that's all on the calculation. And let me come to writing part. Again, in the writing part, you all have the answers like that. Like in the all the situations, the detail, very much detailed answers are there. Then I'm not going to dictate, or I'm not going to reproduce these answers. But I need to discuss with you. Now it's good time for we to discuss on this writing part, because a lot of students I ignore this writing part, then it's not good for you. Now come to this for the 5 marks, which is the what has happened, what you have to do, the advice whether still, I think now I can use this, still not okay. Then advice, this action verb, it's advice. We have not taken the advice. Yeah. In it's in the tier 5 evaluate. Then we have to advise the what's the advice, offer suggestions about the best course of action in a manner suited to the recipient. Okay. Then you have to evaluate or not evaluate. Yes, it's in the evaluate one. Then when advising always, you have to give the advice what is it has asked. Then for that, for you to give that advice, you have to evaluate, you have to analyze the scenario. Then in that situation, you have to give a recommendation, not a conclusion. This is you have to recommend. Please do this. This is the correct way to do. Now come to the question, which is the here advise whether STL can deduct the lump sum payment made to senior network strategy manager under the restrictive covenant agreement in calculating its income tax liability for year of assessment 22-23. It asking for a previous years of assessment. Why this 22-23? What's the reason? Now this is, we will come to the information, then after that I'll ask this again. In accordance with the provisions of the Inland Revenue Act and the support your answer with decided case law. This is a very easy question. And in here, what has happened? STL made a lump sum a payment to its senior network strategy manager who resigned during the financial year 31st March 2023. The payment was made under restrictive covenant agreement, the requesting him to refrain from joining, advising, nor providing consultancy services to any the competitor in the telecommunication operation engaged in mobile network planning, then spectrum management, then fiber expansion or tower sharing strategies for a period of 2 years following his resignation. The company treated this payment as a deductible expense when computing its income tax liability for the year of assessment 23-24. However, what has happened? The assistant commissioner has challenged the deductibility. Then this is the year of assessment 22-23. Lamai, besides this one, I need to know what's the time bar provision. I need to know what's the time bar provision. Any answer? What is the applicable time bar provision as per Inland Revenue Act? What are the 4 types of the assessments under the Inland Revenue Act? I think you all went for the sleep. Okay. Then, yeah, 30 months. 30 months from which date? Please give complete answer. 30 months from the date of the return submission. Then for 22-23 year of assessment, if it is submitted the return on the 30th November, then 30th November 2023, then the 30th November 2024, if I have taken officially, 30th November 2024 and 30th November 2025, still the 30 months is 2.5 years, it is open for assessments. Please understand the rationale. Okay, then what has happened in here, which is the lump sum payment was made to the employee. What's the purpose of this payment? The purpose is to not to compete him, not to him to. We are restricting, we are limiting him to the for what? Joining of a same and similar telco company. On these, not only that, we are restricting, these are the areas which you cannot join. Then what is happening? How many periods they are taking? It's for only for the 2 years period. Then for 2 years period, we are restricting him to act as in a same or similar capacity as he has done with us. What is this? This is to the for this expenditure of the lump sum payment. Then you need to look at this is what is the payment. It has deducted. If it has deducted, then you need to look at what are the sections to be deducted. Lump sum payment, then we have to look at the application of the section 11. In the section 11, we have to look at 2 clauses. Section 11(1) is for the product. If it is incurred for the production of income, you can deduct. When it comes to section 11 subsection 2, if it is a capital nature, we cannot deduct. Now, what is this expenditure? The subject matter of the lump sum payment. It is what? It is a capital nature expenditure. Why I am telling it's a capital nature expenditure? It's a question itself given. It is what is the period of the benefit of this expenditure. It's a 2 years period. And why we have put that restrictive covenant for us to the limiting him on the same and similar activities, then for us to secure our company. Then therefore, the benefit of the expenditure is a long lasting more than 12 months. Then in that situation, what you have to do, then you have to disallow this. This is not an allowable deduction. Then what is the case law provision applicable for that? Not only that, then you have to take the case law provision. Then the Associated Portland Limited versus Clear. In that, the same situation it has happened. Then under that, the capital nature expenditure, it shall not be deductible. Okay. Then for this one, the detailed answer is there. Then I'm not going to go to the detailed answer. It has explained. Then you all can refer. And next one, which is the C for the 10 marks, come to this detail. Then during the audit conducted by the Department of Inland Revenue in respect of Vista TV Private Limited. Now not for the STL. Now this is for Vista TV Private Limited for the year of assessment 23-24. The Assistant Commissioner noted the following matters. Now again the writing part, I need your answers. What are the matters? The outstanding creditors, certain creditor balances payable from the financial year ended 31st March 2021 remain unsettled. Interest-free loan, the company has advanced an interest-free loan of rupees 10 million to Payphone Private Limited. Third one, non-compliance with quarterly income tax payments. The company has failed to make quarterly installment payment and has not filed a statement of estimated tax. As the tax consultant of VTV, then you are the tax consultant of VTV. I need the answers to evaluate. The action verb is the evaluate. In evaluate, in here tier 5, to determine the significant, to determine significant by careful appraisal. Then you need to look at what has happened and what should be. Then you have to evaluate that too and you have to give your opinion on that. Then here, in that, evaluate tax implications of each of the following findings in accordance with the provisions of the Inland Revenue Act and subsequent amendments. Now come to this. Your answer should clearly outline the applicable tax treatment together with the application of any penalty, interest, making explicit reference to the relevant sections, statutory provisions. All this C, 10 marks, if you know the sections from the open book referential materials, and if you can apply these things correctly to the given scenario, the 10 out of 10 you can take. And again, this is a question where students can score through the open book referential materials. Now tell me for the first one, what's the tax implication on this one? Now there is IRD audit is going, and in that the Assistant Commissioner has identified where in the assessment is going for the 23-24 year of assessment. Then in that there is unsettled creditor, it's from the 31st March 2021. Then according to that, what is there? I got the answer. Unsettled consecutive 3 years will be taxed on whole amount. Yes, it should be. It should be done by us, or else the Assistant Commissioner and the Commissioner General has power to do that. The section is section 23, and these are very hot topics. The reasons for assessments, then therefore please be aware in these things, because this is based on our main method, which is the accrual basis of accounting. We have the deemed inaccuracy. Then in that, if there is a deemed inaccuracy happen, then in that situation, the Commissioner General can reverse the amount, as the originally such kind of the transaction is not there. The provision is the provision is uh, on other hand, for us being Vista TV, even we can do that and pay tax honestly. If not, under this kind of the assessments, then what we have to do, then we have to wait till the assistant commissioner is taking this and disallow, and on this we have to pay tax. Okay, then that is on the first thing. I'll just go to the answer since I have explained. Then here in outstanding creditor, it's under section 23 in the accrual basis accounting. This is theory part. Then accordingly, as per section 23(5), if an inaccuracy arises, this is an inaccuracy, then arises in okay, then inaccuracy arises, then what has to do? Adjustments must be made when payment is received, made, or when the inaccuracy is deemed. If not, the Commissioner General can require adjustments in the year in the inaccuracy originally occurred, even beyond the normal time limits. Okay, then for that, for the reversal part, it has given very clearly, which is in here, how in this the however, as per section 23(7), there can be deemed inaccuracy occurred due to accrual basis of accounting. As such, an inaccuracy deemed to occur when a person is calculating the payment of a particular quantity that the person is obliged to make, and subsequently that obligation has not satisfied, and by the payment being made by that person within 3 years of that obligation arise. Therefore, please be in touch with these provisions, and for that, what will be happen, thereby CGIR has power to reverse the liability which was outstanding over more than 3 years as per the section 23(7) and the 5. The 5 is defined what should be the deemed inaccuracy, and the treatment for such deemed inaccuracy, it's in the section 23(7). Then settle, and the subject to under IRD audit, they can do that, and the expired 3 years from the original definition under accrual basis. The 3 years already expired because it has happened in the March 2021. The originated on March 2021. After that, the 3 years gone. Thereby, the CGIR has power to reverse and charge 30%. Not only that, then if it is a charge, then what's the from the assessment, if it is there, then we have to pay. Now, if this has taken, if we have not made the payment or not before the due dates, then this is coming under final payment. Then what's the penalty? It's the 20% penalty. And what's the interest under section? We have for the interest, we have section 57, 58, 158, 57, 59, like that. In that, the 1.5% on monthly basis, the interest will be applicable. Okay, then this is on that. And come to next one, which is the interest-free loan. What is the answer for that? Interest-free loan, what's the tax implication? I'll come to the question later. I need the question answer for my question. Interest-free loan, the Vista TV has given an interest-free loan of 10 million to Pay Phone Private Limited. Under this audit, what can be happen? Under this audit, what can be happen? up to market value will be taxed. What market value again? On what? Non-arm's length transaction, yes, accepted. Arm's length? Yes, it's not arm's length. It's not arm's length. Okay. Yes, yes. Okay. If it is non-arm's length, then we කොහෙන්ද ඔයගොල්ලෝ මේවා කියන්නේ ළමයි? Okay. As a group activity, you all can do this actually, not as individual. Why you all telling it's non-arm's length where it has given in the law? Then make law කියන්නේ from the law you have to explain this. What's the provision? Thank you. It's section 33. It's section 33. I have got the section. Then it's a section 33. This is a control transaction. Yes. Then the under section 33, the arm's length transaction in between associated persons. In that situation, it is very clearly Commissioner General has power to recharacterize the transaction. Now, what's the recharacterization of the transaction? This is interest-free loan. Please, when you are writing the answer, quote from the section. Please quote from the section, especially in the writing part of the answers. If not, how you are going to evaluate? How are you going to tell this is the best course of action to do? Then please write the relevant section. From the open book referential material, use that. At the exam, it's again a useless. Then if you know the sections like this, please apply. Then under section 33, it's the transaction in between its associated persons. Then in that, it should be at an arm's length. But this is not a transfer pricing. I'm not talking about the domestic transfer pricing. Section 77, no, never. It's a separate concept. This is a separate concept. Then in here, if it is not at the arm's length price, then therefore the arm's length means it's for the associated person, it's always a control transaction. We can manage the transaction. We can control the transaction. Then if it is what is the value if the same transaction, same or similar transaction happen in between independent third party, then it is uncontrolled transaction. Then in that situation, what is the rate of the interest? It may be the central bank, whatever that rate for the average lending rate, or else the market rate. Normally market rate is a AW, which is, yes, it's average lending rate is there. Then AWPLR. Then we can go for that one. Then if not, it's being a synergistic benefit. It may be vary. Whatever the rate, at the market rate, it should be applicable. Then what's the consequence you have to tell? How it can be applicable since the Commissioner General of Indian Revenue has power to do that, recharacterize. Now from that, who has the party given the loan? The Vista TV. To whom it has given Payphone Private Limited, it is associated. Then Vista TV, by giving the loan, they are realizing what? Interest income. Is that received? Actually, no. This is deemed interest, considered to be as an interest. Then it is interest income from the intercompany or a related party loan. Then in that context, it shall be taxed at the 30%. Then it should be done. It's on the final payment due dates of the 30th September. It has not done. Then for the penalty, it's a 20% and the interest is 1.5%. It's on the which is on monthly basis. Okay, that is in the answer. I'm not going to refer that again. And non-compliance with quarterly installment payment, I think you all can come to this in the section 90, the quarterly installment payments. First you have to tell that. In which section you have to make the quarterly installment payment. In section 90, the installment payer shall make the payment if being a company, if they have the business and investment income, then they shall make the payment on or before the 15th August, 15th November, 15th February, and the 15th May of the next year of assessment. Like that, you have to first tell that. Non-compliance, it's in the penalty provision, section 179, section 179 subsection 2, if not mistaken. Then in that you need to take from that, and you have to apply the penal provisions applicable. Yeah, section 176, I'm sorry. Sorry. It's a penalty is on the section 176, in that late payment, section 179. Then in that you have to mention that, and always please remember, even the final payment due date, even the quantity payment due date, please mention that 14 days, the grace period. It should be there. Then this is on that, and for the statement of estimated tax return, it has tax, they have not filed that. For that one, this is an information return under first, in the first quarter due date. On that date, we have to submit the statement of estimated tax. After that, if there is a change, we have to file the revised estimate. Now, in our case in Vista TV, what has been happened, they have failed to make quarterly installment payment and has not filed the statement of estimated tax. Then non-filing of this is an information return. Then under section 180, the relevant provision of the 1 million, it will be applicable as the penalty provision. All these details are given. It's a section 180 is for the not for the non-submission, but again it's for a changes, maybe evasion type of thing. But in here in section 185, failure to comply with for the information return, the 1 million penalty will be applicable. And this is on the detailed answer for you all to go through. And that is for 10 marks. Please take the maximum benefits out of your writing part of the answers. It's compulsory. And here, the 5 marks again, this is for what? It's as a tax consultant of the Payphone Private Limited. Now STL done, Vista done, this is for the Payphone Private Limited. Advise the junior accountant with respect to the deductibility of withholding taxes as a tax credit and provisions relating to the refund as per the Inland Revenue Act. Then in that, now asking the claiming of the withholding tax and the provision relating to the claiming of the refund. Come to this paragraph. According to the draft income tax computation of Fairpond Private Limited for the year of assessment 24-25, an income tax refund of rupees 1.8 million has arisen due to the overpay of the quarterly installments together with the withholding tax credit on interest income. What's the reason for the refund? The two reasons. One is for the overpayment of the quarterly installment payment, and the second one is withholding tax credit. Can happen. Then duly supported by the original withholding tax certificate. Luckily, we have all the original withholding tax certificate, then we can claim. But due to this claimability, there is a refund. The junior tax accountant responsible for preparing the computation is of the view that the total overpayment paid tax may be carried forward. This is his argument. Now you have to take this one. To the total overpaid tax may be carried forward to the subsequent year of assessment and set off against quarterly income tax payment for the next quarter, for the 2025-26. In the quarterly installment, it can be claimed. This is overpayment. Okay. His opinion is this overpaid tax can carry it forward, not to show as a refund. This can be carried forward for the subsequent year of assessment. And by telling thank God, okay, without paying quarterly installment payment or reducing the liability of the quarterly installment payment, then we can deduct that. That is his argument. Now, the asking, you are the tax consultant, you have to advise to this junior accountant, is his opinion is correct or wrong, you have to advise. Now, I need your advice. What is your advice? Is this correct? Can succeed in 6 months. It asking two things. Now, when reading the question, we need to look at the sub areas of the question. If you have missed something, no marks. In this question, what it has asked, as a tax consultant of Paypon Private Limited, advise the junior accountant with respect to the deductibility of the withholding tax as a tax credit. This is a one requirement. And there is another requirement. Provisions relating to the refund as per the Inland Revenue Act. Then two, you have to have the right to, forget the 5 marks, Lamai. You have to write the answer for the claiming of WST as well as how to claim the refund. Both. Now I need both answers from you all. Can succeed in 6 months or payment of income tax. The expected answer I have not received. I am asking what's the how to claim withholding tax. Can we carry it forward withholding tax? How to claim refund? As he said, can it totally claim against the next year tax liability as our wish? And without showing that, can we claim it? Can we have a carried forward option? These are the questions. Refund within 3 years. Refund within 3 years? No. First come to one by one. WST, what is the claimability? Where it has mentioned. My question is WST without claiming, as he said, can it be carried forward? Because the refund two components. Then in that, the WST without claiming without refund it and without show that, can we carry it forward WST? The answer is no. The section 89 of the Indian Revenue Act, it has very clearly given a while am I during the WST we are claiming. The reason is law it has given. In section 89, it has very clearly given the WST relevant for the year where the income has shown. This should be, the WST shall be claimed. After claiming, if there is a refund, then we have to go for section 150, the claiming of the refund. Then section 150, what it has given? Without the, before, it's not a without, before the audit of the IRD, the 60% of the 60% of the which is the refund we can claim. But if it is subject to 100% subject to IRD audit, but before audit, we can set off it against our future tax liability. No carried forward options are there. We have to show it and then only next year we can take the 60% of that. The section 150 and section 89 application, these are crucial because these are applicable. Now here, in deductibility of the withholding tax as a tax credit, this is a quoting from the section 89. In that, it's very clearly given, which is the withholding shall be treated as having paid any tax withheld from the payment, and such deducted tax with deducted tax withholding shall be entitled to a tax credit equal to the amount of tax treated as paid for the year of assessment in which the payment is derived. This is in the matching concept. It's very clearly given, and that's the reason we are claiming that. Okay? Then when it comes to, it's subject to section 150, which is on the refunds. Then refundable amounts it has given, which is the very clearly that one answer which is on, in Spriyanth's one answer is correct. The 6 months is there. Then, which is the section 150, it is where the amount of tax paid by taxpayer exceeds the amount of tax assets or found to be payable, the Commissioner General shall refund the excess against the taxpayer's assessed liability or payable amount of tax, interest or late payment. They can set off that. Then unless the taxpayer objects, then the objects appeal any remaining balance against the taxpayer's liability. For that, it has given the 6 months period. Then generally, at the request of the taxpayer, set off 60% of the refundable amount against the subsequent income tax payable by the taxpayer without name, it's a prior to tax audit. Okay, then this is on the tax section 150, and this is a time limit application, how it taken in the prior to 1st April 2000. These are new with the new amendments applicable for the 24-25. And accordingly, the view of the, now I have to advise the opinion of the junior tax accountant is correct or wrong, then accordingly, the view of the junior tax consultant is incorrect. Other than mentioning above, Payphone Private Limited not in a position to claim total refund against the future tax liability. No carried forward. Okay? Then this is the end of the paper. Then it's before 12. Luckily, we have completed. Then this is the end of the discussion of the mock paper. Any corrections? Any corrections on areas discussed or whatever the common question? We can utilize at least 10 minutes on questions. It seems to be no questions. Even feel like that? No. If it is so, it's in my mind. No. Then, is there any mindful way to order the questions to answer? Is it okay to start with the pre-seen question? What is your suggestion? I don't have any suggestions. It's very personal, though. It's your way. Then, if the question 2 is very easy for you, then start from that. If the question 3 or question 1, whatever, then please, it's at the exam, the mindset is totally different. Therefore, it's very personal. Then in that situation, even today, now, I cannot wear your shoes and tell, do in this manner. No. It is the way of you and how you think at that level and how you feel it and how you read it. It's only thing, my advice, manage 3 hours and 15 minutes while the rotating whatever questions, and you have to attempt the entire questions. That's all which I can tell. Last exam, Nisa. Last exam, Nisa, madam. How can I know? Be prepared for anything. We don't know what can be happen. Therefore, your strategic level students, then therefore, now you're in the, which is in now comfort zone. Due to the some disaster happened to the persons in one part of the country, then you have received the benefit, which is the time extension for your exam. Then therefore still you have time. Then don't think about one part. Be ready for your exam in a well manner. Since this is the last time, why don't you take additional effort and do it? Okay? The standard of the paper should be there, and personally, I need to tell the SL3 paper for the student who has done in a good manner can pass. Okay? The every paper, it is set for you to pass. If not, what's the reason? Then therefore, don't think about this kind of the things you all can. And no question. Thank you very much. And okay, thank you very much for all the good wishes and wish you the same. Then if it is so, we can, we can stop then. It's Anyway, it's really happy for me to not to tell good morning for you all in the last time. Finally, I have to told the batch to good morning at that level it was went. Then therefore, let me stop this one, and recordings will be available and the final answers will be available for you all. Then wish all the very best for your examination. Be mindful, don't be panic, and read the questions very carefully. And read, and which I need to tell, practice the past papers and at least go through the examiner's comment, at least for the last paper. It is for you, the examiner's comments for you to not to do whatever the wrong things which was done by others in the previous sessions. Then therefore please go through and understand and manage your time and be smart, be effective, and then even at the whatever the nastiest thing is happened at the exam, then keep on writing and keep on doing. No one can stop you until the 3 hours it has gone. Therefore, there may be difficult question, there may be different question. Don't worry, you can do that. Keep on trying, keep on writing. That's the only thing which you can do. Okay. Thank you very much. And Mr. Aruna, thank you very much again for your kind cooperation on this as always. And wish all the very best for all of you and for the upcoming, which is from the next day is a new year. Then wish all the very best for all of you all for the new year and wish you a happy new year.